Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live in studio. We have our senior economist, Tracy Shuchart, shy girl. Hear that, Jimmy? And in Charleston, not in studio, my boy Jimmy Cagnina, Cags, our senior market strategist. Good morning.
Good morning, everybody.
So, first day of the month, first day of the quarter. I think yesterday the longs stepped in and really saved the market. The buyers stepped in and saved the market from what I think could have been a really ugly day. I know we talk so much about collar trade, end of the month, end of the quarter. It's not the day I expected it to be honest with you guys. I mean, it's again, the low was, I don't think it was a good low. I mean, we've talked about this last time. Was it a good low? Was it a great low? It was a low. And it just feels like the market's grinding lower. That's what it's trading like. End of the month, end of the quarter didn't seem too busy. There was a lot of volume on the close, but overall, I mean, it was really, I think you just look at it, just another day. You check off on the calendar. I don't think it really did much, and today we come in first day of the month, first day of the quarter, day before Liberation Day.
Liberation Day. I love that.
It's just kind of weird times. And, I don't know. Any thoughts for you, Jimmy? Maybe we start with you today. We always start with Try first. I mean, any thoughts on what yesterday was?
Yeah, yesterday, I was as surprised as anybody about yesterday in the equity market. And, what I'm not surprised about, though, is overnight and this morning. I felt like yesterday was a clearing of positions across the board with everything that's happening, and maybe even some clearing of positions before Wednesday's tariff announcements. I think they're at 3 p.m. or I don't know what time. But so today to see that sell off a little bit in the morning again, I feel like that's where it should be. So I don't know that the low is in yet. I'm not sure yet. I don't think we will know for a few days still.
Yeah, it didn't feel like yesterday was a significant low. I also don't think that yesterday's high was that significant either. I look at 56.80. It stopped just shy of there. I go to my boy Pax to see what he thinks. He said 56.17 is a key pivot for the quarter. We're actually not far from that this morning. I'll keep an eye on that this morning. But shy from a macro perspective, new J.P. Morgan collar. Even though that's not really macro, but it's in the headlines, right? I mean,
right.
Yeah.
Well, everybody's talking about it. It's not exactly in the headlines, but everybody's talking about it. And to be honest, it's a pretty bearish collar. So what they're doing right now. So remember that it's a long equity portfolio. So the whole fund holds like a basket of S&P stock. So it's a hedged fund. So what the collar does is kind of hedge their long only positions in the S&P. So the new one is they sold the 5880 call, and these expire June 30th. But they sold the 5880 call. This does kind of cap the upside potential, but it generates premium income for the fund because they're selling it. And then their put spread is the 52.90. They bought the 52.90 and they sold the 44.60, which kind of offsets some of the cost of that put spread.
So 52.90 at 44.60 is the put spread, you said?
Correct.
And then they sold the 58.80 calls.
Right. So that is a pretty bearish. That's pretty bearish.
That's not a bright outlook.
Right.
I mean, if you're selling 58.80 calls, I mean, it's. And then Jimmy, back to you. I mean, this morning we always look at the Mentor Q data. What's the option market telling us?
Yeah, I mean, it's still for the E-mini S&P as an example, we're still in a negative gamma situation. Option activity, though, today is ranked low at a 1. Volatility is neutral at a 2. Slightly positive seasonality at a 2. And it's expected to be a 1.14% one-day move today in the S&P. That's for the E-mini S&P right now.
I mean, could we have an inside day, first day of the month, first day of the quarter? I think so. You know, it doesn't seem like anyone's going to probably want to stick their neck out going into.
That's what I was thinking too. Like going into tariffs, would you want to put on a big position? Likely not.
Yeah, no. And good morning, chat. I see Leo's out there. He was telling me that I was wearing a medium yesterday. It was a large, for the record. For the record. And I didn't want to wear a short sleeve shirt to distract you with my arms today, Leo. So I wore a long sleeve shirt just for you, Leo. That's how much I care that you're in here in the morning. I appreciate that. So, you know, I think from a technical perspective, I look at a few things coming into a new month, a new quarter. Number one is for traders coming out of last month, last quarter. The first thing I will say is leave that quarter behind you, right? If you did good, you got to keep doing good. If you didn't do good,
Quarter.
It's a new quarter. See what you did. I mean, that's the beauty of markets. It's as long as you're in business today, it's a new day. And you know, these markets, I look at these markets and it feels like we're just grinding lower, almost like we grinded higher, right? I mean, I think the mistake I keep making, and I was talking with Pax about this last night, is for some reason it's embedded for us to look for like a V-shaped bottom. You know, like we're all looking for a good low, right? And I'm thinking to myself, like, man, Deli, you've been around long enough to know that, look, what's really changed this year is that the market isn't necessarily making good lows. It's just grinding lower. Mm-hmm. And it's trading straight up like a bear market. And it's hard to conceptualize that when you come off of a previous quarter or previous multiple quarters where everything was just a grind higher. Now we're in this grind lower mode. And you see, like, you look at this morning, we come in a little bit lower, right? You go back, and it just feels like almost, I don't want to say normal, but it's what we saw so much of the past, right? Like we'd have, take yesterday as an opposite scenario, where yesterday would have been maybe lower on a previous day. You come in, we're just grinding higher, right? So you look at those moments where the market's just kind of quiet and not doing much. The tape just continues to move lower. It doesn't have that underlying bid in it, is which we are accustomed to. And it's really just a new type of market environment. So that's the first thing I think of when I look back at what were my mistakes last quarter. Was I wouldn't say it was necessarily that I traded poorly off of looking for new lows, because I caught a couple of good longs, but it's just my mindset is like I'm trying to find a low. Why? It's like, okay, well, you know, it's going to happen when it happens. The other thing I think of when I come into this quarter, I do think it's starting to hit Main Street a little bit. You know, I feel like sentiment's just getting worse and worse, right? And so, you know, this morning I follow Andy Constant on Twitter. I hope someday we have him on the show. I'm sure we will.
Oh yeah.
He said that, you know, he was talking about he's now in the belief, the camp, that we're going to have a recession and we're going to see some aggressive QE. I mean, Shai, is that just Andy, or are we seeing a lot of top macro minds thinking that?
So there are a lot of people saying just that. It's really weird. I feel like it's split into two camps. Some saying the economy is doing fine, sentiment's down, but the economy is doing fine. And so, you know, the Fed has no reason to cut at this point. Yeah. And then the other kind of camp is we're just not, it's all the data right now is lagging data, recession's coming up. The current data is just not reflecting it yet. And consumer sentiment is sort of leading, and, you know, business sentiment is sort of leading. And they think that this could spur, you know, 3 to 4 cuts this year. So there's kind of two different camps going on right now.
Yeah, I mean, you know, we're in Florida, and, you know, you're seeing real estate just come to a screeching halt down here. Yep. I mean, it's so similar to the market. It was as hot as can be, and now it's really cold, you know. And you could feel it out there that people are slowing spending down. You know, recessions are it's mindset, right? I mean, people with money are always going to spend money, but even people with money, you know, they pump the brakes when all of a sudden they see people spending less money. It's just the way that the world works. I mean, that's what happens with recessions, right?
And with the markets lower too, I think the boomers, you know, they still have the most disposable income, obviously, but I think every time we see, you know, a larger pullback in the markets, you see a little bit of fear on that end too, because a lot of their wealth is, you know, tied up in real estate and the market.
You know, it's so funny. I didn't even realize I forget that it's April Fool's because I don't do this stupid ass things like this. And first of all, the chat's telling me that Andy's saying it's an April Fool's, or Leo's saying it was an April Fool's joke by Andy. I wouldn't doubt. I forget. I mean, who still does this, right? I mean, really. First of all, I was reading that at like 5:30 this morning, so I was kind of like one eye reading it, and so maybe that is the case, but maybe not. With Andy, I'm not sure.
He's not really the April Fool's kind of.
I know he doesn't seem like but maybe. Also, good morning, Chad. Thank you again for tuning in with us every morning. We appreciate it. I love seeing everybody in chat. Make sure you hit the like and subscribe. But we talked about this yesterday. Over 5,000 subscribers since we started NinjaTrader Live, going live with the three of us in the morning. It just over 2 weeks ago.
Like and subscribe.
Yeah, which is cool. Oh, Andy did say he said it was an April Fool's joke.
Oh, okay.
Like Andy's doing this to us at like 5:30 in the morning. Like, come on, man.
I don't know. Still, there are two camps. I mean,
Yeah.
we had Tony on, and he thought 3 to 4 cuts. So, Tony Nash. So there are two very distinct camps going on Twitter right now. Aside from I'm not judging it from what anybody said today. What's been said over the last month or so.
But I mean, if he could come up with a joke, I think he could have found one a little bit better than that. It just goes to show his sense of humor isn't the greatest. I'm gonna have to tell him that when I talk to him next. But also, people are saying transport's clearly signaling a recession around the corner. Jimmy, you've been looking at the tape more than anybody, and what is like your sentiment? What is your thoughts on sentiment coming into the new quarter?
Well, I agree with you guys. I think individuals, we're all a little bit worried, and we're going to taper down a little bit going forward here. One of the things that I'm kind of worried about, we're going to have a declaration on Wednesday, and then we have all of these customs agents that have to figure it out and immediately deal with whatever it is, and it's gonna slow the supply chain down. It's really going to cause some bottlenecks, and that probably won't. It'll last more than a day. It's not going to be easy to clear that whole thing out. So I know you're asking about personal sentiment, but this is kind of an important thing in my mind, and I think the more I read, the more I'm worried about that whole confusion that's going to happen, I think.
Well, and I think so too. We've seen a lot of companies pre-buying, like ahead of these tariffs. We've been talking about it. Cags and I have been talking about copper, for example. The U.S. is importing a lot of copper in case these tariffs come sooner than later. And so I think we're seeing that across several industries where they're kind of buying the commodities that they need, trying to get ahead of the tariffs.
Oh, that makes total sense. I mean, overnight, the only thing that really pops out at me a little bit is that I see that the 30 years up. I mean, that's like, it's up the most. I mean, it's the only thing I look at and go, okay, 30s are up, long ends up higher.
Well, exactly. I mean, I think the Treasury market is telling us that the market is worried, right? So,
Yeah.
I mean, they've been very bearish, late last year, all throughout late last year, actually. And we're just starting to see this bounce, kind of in January, and it's looking pretty strong. So I think that, and obviously the gold market is saying we're kind of worried.
That thing is bid, man. That thing is just bid. Gold.
It's a monster.
It is. And you look at 10-year this morning, 4.16, lowest it's been in a little while, so that's interesting. Economic data today, Shai, what do we got coming out?
So we've got S&P Global Manufacturing PMI and ISM Manufacturing PMI. They're basically the same thing except for from two different companies. And then we have JOLT, which is important because we're going to be looking at layoff numbers, firing numbers, and hiring numbers. So that'll be interesting. Obviously, the labor market is the Fed's focus along with inflation. So we'll be looking out to see if those numbers come in line, or if we're starting to see kind of those layoffs in the federal part of the government kind of start showing up in that data.
That should be interesting. Doge.
Doge.
Doge. Well, it's about that time for this morning's Edge Report.
All right, well, let's start with the main event here, the E-mini S&P. We already talked about the gamma conditions for today. Daily chart, we have an inside bar, as Deli pointed out so far. Baby candle so far compared to the previous two sessions. It's kind of inching down a little bit, close to, well, actually between the 56.50 and the 56 even number. Let's take a look at the intraday and the Menthor Q gamma levels. We have kind of a, I don't know, we're trading in a 45 rather, point range, high to low today. So a very small range today. We have the JAX 2 right up by the previous session's highs, which is approximately 56.72 half. And then framing the bottom of the conversation, interestingly enough, is JAX 3, JAX 4, and the pivot. So there's a lot of support down here for now. But, again, we keep trying to kind of move down toward this direction. Use your imagination, maybe a little bit of a double bottom from these early tests, or these probes, we'd call them, right before midnight. And then again, the last 30-minute candle, and RSI is not a factor right now. Put support, ultimate put support at 5,600, not a surprise there with the options activity. Let's keep rolling though. Really, the market of we'll go to another stock index futures in a second, but I mean, this is gold. I mean, gold is just another new high overnight in gold. It just keeps moving. We have a series of higher lows, a series of higher highs. We have a fib projection that actually just got tapped early this morning at approximately 31.74.6. All the moving averages are straight up. We're still in a plus 70 state with the relative strength index. So again, there's no retracement. There's no slowing down here. On an intraday chart, really nice 0 DTE wall resistance, gamma wall resistance right at R1, and it's approximately 31.75, give or take a couple of ticks up or down either way. And at the bottom, I would go ahead and draw a rectangle here. I'm going to do it really quickly on the fly if I can, and just kind of show you where support is. Support is down here. We tapped it once, we tapped it twice, and now we have a really nice kind of point of control right now. So everything's kind of settling down a little bit. My guess is when the economic releases come out, things are going to move it. Let's go to the Bitcoin though. Bitcoin has been an interesting story for me. I'm going to pop in that April Bitcoin really quickly, go to a daily first. We're outside of that trend channel that we identified earlier. Moving average, that 8 EMA, we just touched that 8 EMA. Again, it's looking like a bullish candle so far, pretty decent size after yesterday's doji. We'll see if we could break back into that trend channel on the April Bitcoin. And on an intraday, we have a high vol level at 85,000. I got to get used to saying 1,000 instead of 100. Didn't quite make it there yet, but that's going to be an area of what I would consider resistance. But it's been a nice kind of move up. We have a regular textbook retracement brewing so far, nothing out of the ordinary. A nice kind of volume cluster here at the top. We're still trading above previous sessions highs, which I hope will be short-term support in this market right now. So we'll see what happens with Bitcoin. If it goes the same way as equities or opposite equities, you never really know with that particular market. The other really hot market here, this is the 10-year notes. Deli was mentioning the 30-year bonds, but I'm looking at the 10-year notes here. And, we had this long consolidation period, really long consolidation period, really starting at the end of February for the whole entire month. And then I thought we were going to break through yesterday. Sellers came back in and pushed us back down into the consolidation range again, but not this morning. Buyers came back in, pushed us back up. We're challenging this target wick up here at, 112.01. Gamma conditions positive here. Menthor Q is expecting a 0.41% move, one way total for this market so far, and it's not disappointing. We're really moving here in this 10-year note, and this is kind of telling us, hey, we're going to brace ourselves for Wednesday. I think that's the story there. And if you look at the yields, I think Deli also mentioned those. Let me just pop up the two really quickly here. The 2 and the 10, right? The 2 and the 10 right now. The 10 is at 4.247. This is a CME Group's micro yield. And then the 2-year, by the way, that's a good market to trade. And then the 2-year is 3.913. So the spread is, the spread is a spread. It's the normal spread, normal part of the yield curve at this point, not inverted anymore. But this yield number is kind of interesting to see. We'll see if we could break down below that 4.2 number. Anything could happen. It's very possible. Lastly, do I have time for copper? We'll throw it in there really quickly here. Where is that guy at? Get copper up here really quickly. Again, this retracement is the retracement is finally stalling right now. So, we have that turnaround doji. We tapped that 50% retracement. We do have a kind of a baby candle right now. So it could be that this sell-off is kind of stalled, and we could have we could resume to the upside here, which I expect is going to happen sooner than later. Just to look at some options numbers really quickly here. 1-day max, we've already wicked through it at the top. A whole series of JAX numbers. JAX 2 right here is at 5.02, and then JAX 1 is at 5 spot even. So we'll see if we continue to trade below that value area. My guess is we're going to be value area trading today in Dr. Copper. Back to you, Naples.
Thanks, Jimmy. Couple things came up in chat I want to talk about with you, Shai. Gold and silver. Someone's asking, is retail buying all the gold? I mean, it's obviously more than just retail.
Yeah, it's more than just retail. Really, what we're seeing is, the ETFs, the ones that buy physical gold. Some of the ETFs are backed by futures. Some are backed by actual physical gold. So what we've seen, particularly this year, is a lot of those ETFs that buy the physical in both silver and gold are buying a lot. We had 126,000 troy ounces that were bought just yesterday, and we're like, and cumulatively for this year, those ETFs have accumulated 5.07 million ounces, which is up 6.1% on the year. So those ETFs that buy the physical are buying the physical in amounts that we normally do not see. And the same goes for silver, a little less for silver, but we're still seeing a lot of those physical backed silver ETFs buying these.
And you wonder if that is having an impact on the Bitcoins of the world as we see them up today as we're down in the indexes. First of all, I'm never someone who's really bought into, Bitcoin moves with the NASDAQ. I thought that's a load of crap, to be honest with you. I've never looked at the NASDAQ or I've never looked at the S&P and go, oh, Bitcoin's up. let me buy some S&P here. I mean, they might correlate as a risk on, risk off type asset, but correlations, I could correlate a lot of things that look similar to me. If Bitcoin is what it's supposed to be, it should correlate, I would think, more with gold, right? And I'm starting to wonder if in this environment we start to see it correlate more with gold and silver than potentially equities.
We'll see. I mean, we've seen pretty much this year, we've seen Bitcoin kind of follow the equity markets more so than the metals markets. And I think a lot of the reason for that is because of all these new Bitcoin ETFs that are out there now, right? And so now kind of more correlated with the equities markets than, say, the gold markets. But if you remember, before, when gold was down and Bitcoin was up, the narrative was everybody's buying Bitcoin, gold is a relic, right? So I think that obviously we have Bitcoin stalling out and gold is on a tear. So personally, I don't think it's ever been an either or situation. I consider them kind of two different, completely different assets.
Yeah, I mean, I'm not a big crypto person. It was funny. I was really entrenched in it initially. I was even buying.
I remember.
You remember? And it all goes back to, I remember seeing people at these futures conferences I was going back to in like 2015, 2016. It was all about crypto. I'm seeing the top, firms in our industry talking about crypto. And I'm like, man, what is going on here? And so I got really kind of deep into it. I actually bought, I can't even remember what they're called now. What were those? I bought horses that were based on Ethereum. I mean, it's just craziest things. I don't even know.
The NFTs?
NFTs. It's so bad that I've totally...
You blanked it out?
I blocked it out of my memory.
That fad went quick.
That fad went quick. And you know what? I'm lucky I scalped my way even out of that because, boy, I don't even want to look to see where some of those are. So I just, crypto horses, yeah. My man was breeding horses, Merritt's. Yeah, but we got Merritt today. We didn't even talk about that. Merritt is going to be trading live today, and we're going to have Merritt on with Cagnina to learn a little bit more about him and Apteros. But yeah, just getting back to like the Bitcoin, like, what's going on. It's interesting that the first day of the quarter, what I like about the first day of the quarter is that you get to see what the bigger picture people really believe in, right? Like, what are those initial day flows? So when I look at the first day of the quarter, it's like, okay, what's up? What's down, right? There's obviously bigger players behind it, and they're putting their positions in. And again, this goes back to what people have to do
Right.
and what they want to do, right? And so you have the equity guys that kind of have to buy equities because, money's coming in. But then you look at this other stuff and you go, what are people buying? What are the bigger players in this space buying? They're buying 30-year bonds. They're buying a little bit of copper, a little bit of gold. They're buying some crypto. They're not buying equities. Right? For now. I mean, it's early, and we don't know what today brings, but you're not seeing enthusiasm towards equities, and it could be everyone just goes, we pump the brakes going into Liberation Day. I mean, this is the dumbest thing I've ever had. I mean, this is like all-time dumb things that we're talking about, Liberation Day with all these,
Yeah. I
don't
don't know where that came from. I don't even know how to get on that right now.
Everyone's asking if we only have candlelight in here. We had an issue with Shy's light. She looks great in studio, but we had a little issue with her light, and we will get it sorted out for the rest of the day so we get to see.
I know I can see myself. I'm like, I look fuzzy.
So yeah. Again, you look at today, and the most that sticks out to me is what's happening not in equities.
Right, exactly. To me, this just screams flight to safety right now. We don't know what we're going to do. And, probably those long-only hedge fund guys got to hedge with something, right? So I'm sure that there's probably a lot of options trading beneath the surface in case the market continues adversely against a long-only portfolio. Kind of like the JPM collar, but hedge funds as well. And so, that could be providing some kind of downward pressure as well on the market.
Yeah, I know. And it's so funny. I don't know how long this JP Morgan collar trade has been going on where it's been in the mainstream. Like, I have not really followed it up until last week. I mean, it's not something I've ever really had. Another thing I didn't have on my bingo card I'm watching. And you see stuff through X, and it's like, a lot of this stuff is just so far out from what we could control as, I'm a swing trader. I'm not really day trading. Most of these people here are day trading.
Right, and something like that
it's not going to come into play.
Right, but it's just interesting. Again, to me, it was just interesting how bearish this particular collar was. And it's for the quarter, too. I mean, they're sticking with it. They let these things, expire.
Exactly. I mean, that's what's really interesting if you think about it. Last time before we get to Pharm here in just a few seconds here, JP Morgan collar, they sold the 58.80 calls, right?
58.80 calls.
And they bought the put spread, 52.90, 44.60 put spread.
Correct.
I'm really bullish, and we'll see. But
Right.
we will stay up to date throughout the day for any headlines or any news that we get with Shy. Thank you so much. We'll fix that lighting for you so everyone can see your. There we go. It's getting better and better as we go.
A little bit. Oh, look.
Yeah. All right. Thank you, Shy.
Thanks, guys.
All right, everybody. Next up, the man, the myth, the legend, best calves in the business. He's got his navy blue on today. My boy Pharm. Good morning.
Good morning. How are we doing, Deli?
Good. Initial reactions coming off of yesterday. I got to tell you, Pharm, I put a thing out on the close yesterday where it was Obi-Wan Kenobi, and he goes, "These are not the drones you're looking for." I said, "This was not the close I was looking for the end of the quarter." It was like, I looked at yesterday. It was like I did nothing. I mean, I watched this day, and the whole time I'm going, like, is there something going to happen? I mean, and it not like something didn't happen. It was still 100-something point range, but it felt, I don't know. What were your initial reactions on it?
Yeah, I mean, I'm kind of with you. I didn't do a whole lot yesterday either. Just came in with some swings and took some shorts off, at the lows, and then added to some longs. And I mean, we'll see, right? We did get a nice, a decent low, structurally, looking at yesterday's low. I'm okay with it. Well, I'm sure we'll get into that a little bit more. And buyers ultimately did, lift things. And I think we're going to find out today, and we're kind of finding out, this is a little prelude to it, what's happening pre-market. We're, going to find out if those buyers were serious, I hope, today, or if it was just a lot of covering. So I'm kind of in a wait and see mode. There's a lot of, I mean, how many times have we had bottom called in like the last couple of months, right? It seems like mostly Fridays, at least this was a Monday. But let's see a follow through day before we get too excited. But overall, definitely a slight change in character yesterday, where a lot of the aggressive selling was getting eaten on the way up. And I think that's good to see. To me, there's two things, right? There's strong selling and there's aggressive selling. And there was a lot of aggressive selling that just got eaten.
Yeah, and you said that the low was okay. And my first thought is, because I look at you for structure when we're making highs or lows, is the low, this recent low, better than this previous low? I think we lost Pharm. Or is he there? I think I'm talking to myself. I'm just talking to you, audience. I'm talking to you, audience. So in the chat yesterday, let's go to the chat. First of all, good morning. Hit that like and subscribe. Thank you so much for being here with us. We'll get Pharm back here in just a second. I think it was he's going to tell us he was just too good looking for that camera this morning. The camera couldn't take the heat. And so I think that's what Pharm is going to be telling us. But I want to hear from you guys. Leo says the low is better. Let's go to the chat. Do you think yesterday's low, from a structure perspective, was better than the previous low? Leo says the prior low was weak. I go off of what Leo says. This low is better. I would agree that even from me, and when I don't look at that stuff as short term and close as that, I did feel like yesterday's low was better. It felt a little bit more capitulation type. That's more of what I look at, and just the way that it traded. A lot of people are saying better. Yeah. Price action was cleaner. This ain't it. I don't think the puke is over. I agree with that. I don't think this is it. I don't trust anything at the moment. I have better but not good enough. I mean, these are great. So, what's funny? It's interesting. When I go to the chat, like I said, we're getting Pharm here back in just a second. Like he said, he came in too hot this morning. The camera couldn't handle his heat. That's what he's going to tell us. I guarantee you can't hear me yet, but I know that's the story. It's coming. Just prepare yourselves for it. April Fool's jokes are so 90s. Look, we got Pharm back. I see him on screen. He's here. He's with us. What happened, man?
Yeah, I accidentally was stretching out my calves under the desk, and it just kind of blew out the CPU, and camera hub went down. It happens. Things like that happen a lot. So
It happens.
very bizarre.
I mean, it really is. I know. He could only wear shorts. He can't even wear pants. He's got to have specially made
custom tailored
pants.
pants. Yeah, I had to go to a wedding, and it was like $400 for pants. I had to have them custom tailored. It's a burden. It's a burden, Deli.
Well, here we are with the boomer bands. I know. I'm not a boomer, though. I have to make this clear. Cagnina's told me, Anthony, you're not a boomer. You're Generation X. And it is what it is. But they're the boomer bands, and we're sticking with it. So first thing I want to look at this morning, Pharm, when I come in the first day of the quarter, the first thing that I look at is what are the bigger picture players, the bigger players in this space doing even before pre-market? Like, what is standing out? You saw Bitcoin up a little bit, ETH up a little bit. Not that I'm holding too much weight into what they're doing just in one morning, but you also had 30-year bonds up, equities down. You know, you had gold and silver up and copper. So I look at it and go, and just like we were talking about with Tracy, it's like more of a flight to safety. So when I come into Q1, it's one of those times and days where you just want to see what's the bigger picture doing. So when I look at it, the first thing that comes to my chart this morning is going to be the 30-year bond. And when I look at it, this thing is starting to look a little bit ripe for a rally, which if you guys know, if you trade bonds, which I think a lot of you should probably look at bonds and treasuries, they're actually a really good trade for day traders. And there's smaller ones and bigger ones. There's all different kinds of treasuries you could trade. You could trade SOFR, you could trade 2, 5, 10, 30s, you could trade ultras, you could trade 10-year micros. There's all sorts of kinds. But when I look at the 30-year bond, to me it looks like higher, which when it rallies, which means rates are lower. We'll see what happens there. Next thing I look at is gold. When I pull up gold, run, Forrest, run, man. I mean, this thing is just going, and I don't see anything stopping it. And I go back to, what do the Bollinger Bands do for me, everybody? Expansion, contraction. Are we in mean reversion, or is this a breakaway range? When you see it, you look at it, and it's a breakaway range, and it just tells me just don't be in a hurry to fade it. Gold has got momentum. So when you go back to looking at, 30-year bonds and gold rallying at the beginning of a quarter, you take us into equities now, and you look at equities, and you start with the big boy, the S&P 500. It just looks out of gas. I mean, there's no momentum behind it. Yesterday was an up day, sure it was. I looked at yesterday as a day I didn't do anything. I established swing multi-day positions. I couldn't do anything there. The most notable thing for me when I look at yesterday, and I've talked about this a lot with you and I, Pharm, we looked at, let me get my rectangle out, my boomer rectangle. Even though all the young people are using the rectangles now too. It's kind of cool. Couldn't get below above 5680. Yeah. So to me, 5300 is where I think the market is headed. From a bigger picture perspective, I lean more bearish. We can't regain 5680. We're below 821.34 moving averages. Again, moving averages don't get me into trades, but they help me see just the average prices. They can't even hold above them. And when I flip through NASDAQ, same thing, couldn't regain my area, which for the NASDAQ comes in at 19,838. Couldn't regain it, well below moving averages. Let's go to the Russell, same thing, 2051, needs to regain that for me to get bullish. It has not been able to do that. Let me just take my rectangle and go over that area. It's the same look, across the board. And we go into 30, 30. The Dow, as it's called. When I look at that, the Dow is actually the strongest on a relative basis for my indicators. It's 42,367. If it holds above there, it has a slight bullish tone to it. But I don't really trade Dow. Overall, they all look similar. So for me, coming into the quarter, I look at it today and say, I'm going to be watching today. I don't think, for a swing perspective, going into April 2nd, tomorrow, Liberation Day, as we've discussed, makes any sense for me to do much of anything. But I lean more towards bearish. I think yesterday was a day in the books. It was what it was. That's all I've got for me, Pharm. I keep it really simple on Q1. I'm going to be curious to see what you have for us today.
Yeah, I mean, as I mentioned yesterday, there are some things I like about the low and some things that I don't. If you've got my chart, I've just got the daily, and keep in mind this is a back adjusted chart. In this case, we did sweep the prior low and really didn't see much other than covers down there. So sellers weren't too interested in initiating and got a decent rally. Okay, fine. Bulls still have not accomplished anything. I mean, let's see if they can take out and sustain above yesterday's high would be sort of their first task here. And that does open a decent retrace. So, I mean, I do kind of like the fact that we swept that previous low on cash index, back adjusted chart. We did not on a non-back adjusted ES chart. So that's like a tiny little drawback for me, but I'm not a purist in that case. The Qs did though. I mean, they took everything. So and Qs probably, I feel like they've mattered the most for the last year at least. And so we'll see if that is good enough. Then drilling in under your 30. For the week to date. Developing profile. We can see we're trying to form a double distribution profile, break away from this volume from early last week. Now, if we give that back, I mean, you probably don't want to see that. I do think there are some potential traps just below kind of this spot. I think you mentioned Pax said 56.17. I mean, that's basically what Friday's low was, so if we're breaking back down below Friday's low, the cash hours low, I mean, that's probably not a very good look. The other thing I'm looking at today is the yen. I had mentioned I was watching USD JPY really for this whole move down, and it has looked a little bit risk off tonight to me. So I mean, the dollar's not necessarily weak, but the dollar relative to the yen is weak, and so maybe a subtle bit of risk off, which makes sense into tomorrow. So first order of business for buyers is to defend, which so far they have. Tonight they've defended the spot. If you're a trapped seller down here, you've had a chance to get out. And at some point soon here, buyers are going to have to demonstrate their willingness to initiate and lift this. If they can sustain above, let's just call it yesterday's high, then we've got, nothing in here from Friday, right? Very thin structure, poor structure. So in theory, we could retrace, let's call it up towards Friday's open, and everybody would be nice and bolt up. But that would just potentially form a 3-day balance if you look at the daily with yesterday and today and Friday. We could just sort of form a range here that would ultimately be important to lift. So I didn't see as much puke as I still would have liked. I've mentioned I really want to see a proper washout. So into that low, it wasn't quite as much puke as I would like. You can see there's a nice buy tail on the 30. There was on the 5 as well. So the 5-minute excess translated to 30-minute excess, which translated into daily excess. And we got a multi-distribution day up. Like those are all, to me, if I have to draw out a swing low, I mean, that's probably how it's going to be drawn up. So I'm, probably being a little bit critical if I say it's not great because I didn't see the volume I wanted in terms of puke. So I'm willing to give it a shot. I'm not attempting to swing the index here. I did take a lot of profit on some of the shorts that I had on in terms of, hedges, had some puts and, some inverse ETFs, things like that, UVIX, and then added a little bit to my longs, and I'm leaving those hedges, portions of them, because, if we do rip down here, it protects me if we stop out on those longs. And so I'm open to it. I'm open to this, but I don't really think you want to see buyers give back the overnight low unless it's just a really quick trap for today. And I'll definitely be watching USD JPY to see if it continues that subtly bearish or risk off tone. I'd say 148.84 for me. Like if we're offering that from below on USD JPY, and we're ways off that right now, but I think that's a problem potentially. So that's where I'm at with this. Open mind. I'm willing to consider that this is a good low, but we've got a lot coming this week. A lot coming.
Yeah, I mean, we didn't even talk about unemployment Friday too. We've got some JOLTS numbers today. I think they're going to be interesting. Tracy talked about this, with everything that's been going on within Doge. You wonder if those numbers start to show up. What does that mean for the Fed? I think the tape will be sensitive to these data points today. I think that the tape is looking for little spots to grab momentum. First day of the month, first day of the quarter. Again, I think what you highlighted, it's interesting with the yen. It goes back to, it doesn't feel like risk on. I know that term has become popular. Risk assets don't seem to be in favor right now. And I think that's it. If anything, that's what you see coming into the tape today. But that could change really like at the snap of a finger right on the open today. I agree a lot of what you said when you look at what's happening in S&P and NASDAQ. If they could defend the overnight lows and they could build above yesterday's highs, I think it changes really, I think, from a technical perspective on my stuff as well. 5670 something was yesterday's high. And then they get above 5680 for my level. All of a sudden I go, wow. You go from looking at 5300 for me to all the way up to 5900 again. I mean, it is that much volatility, I think, in the tape right now. I want to see if maybe we get a little bit more from you. I know normally we wait till like 6-7 minutes in to go into what to look for today, but I want to talk a little bit more about where we are on the bigger picture and really how much these next few days really are, I think, really of key importance. I think today, just hearing from you, it's like the bulls kind of need to defend this, because if we do start to get back down in there, like where do we start to go if we start to head lower? Like what does that look like?
Yeah, exactly. I mean, I do think there's some potential traps available. I mean, look at some of the selling that occurred sort of in this range of consolidation here, before this was lifted. And so the question is going to be, was this, organic buying, new money buying that lifted this, or was this, short covers? And I think we find out. So, I mean, if we come down here, we lose, let's say 56.17, and we just come down a little bit to, tens, even down here into 56.03. And then we reclaim the overnight low base back above, let's say 17 to 22-ish, let's call it. Then that would be a good look for bulls. And I think you're getting a retest up here, maybe closer to 56.60s. But yeah, I mean, if you're trapped back below here and then just, grinding lower, we're going to give it back, I think, pretty fast if it's not a quick trap. So really open mind. But and what I'm going to be doing is I'm going to watch that USD JPY right at the open and see how we find an opening drive. So if we get a drive lower on USD JPY and a drive lower on equities, then I'll be watching for that to flip quickly, because as you mentioned, like especially once you open cash, you get a whole new set of participants, and we'll see what happens. So, it could change fast. So if you see those both, head lower, and then USD JPY reverses quickly back higher and equities come with it, then I'll start to think that this morning was just a trap or a Kaiser Soze, I like to call it. Bulls are just like feigning weakness overnight, and then they just come in and lift it. So, I'll use that meme sometime. I'm long right now, just like waiting for my stop to hit. I'm out most of it, but I was long 22s this morning before I got in the shower, and out most by 34. So I think into the open, and like we did this yesterday, ahead of the open, right? Like what's the last 30 minutes or so going to do after I turn this off? And of course it moved significantly yesterday. I think buyers are probably going to have to lift these like 39s, 35, 39. They're going to have to base back up here to open the day on a retest of the high. And if they cannot, and it looks like sellers are trying to hold this below 35-ish, which is a pretty key high time frame spot. It looks like they're kind of trying to force this liquidation and make, in this case, me puke my runners. So we'll see how that plays out, drilling into the 5. So that's kind of back up here. Let's say at least 36, 39, I would say, and probably getting a rotation back up here towards at least 57 to 62 maybe would be a nice look. So yeah, I mean, it just keeps grinding and grinding into this spot. So this is literally, it's either a Kaiser Soze or it's going to break down at the open, and it could start to look gross.
Two things. One is we've got chat asking why out of most of the position if you bought the 22s and sold the 34s. What's the reasoning? Maybe we'll start there, and then I'll get into the next question I've got.
Yeah, for 22s. So, I mean, basically, if you look at the weekly developing profile, and you've got Friday's low, cash hours low was 17 and a quarter, and you've got this LVN here. And so again, this here renders sellers from down here trapped. So all this selling that occurred here, they are stuck. So when price returns to an area near where they initiated on the short side, they're going to have to cover. So I'm at least expecting some kind of cover response. And if you're a buyer, you want to leave them trapped down there, right? So you bid here to leave them trapped. And so that's the idea for this. Now it's getting kind of beat up here, right? We've come into it a number of times. And so at this point, if it doesn't lift, then I'm probably not going to try again unless they leave behind some kind of fresh demand sequence or something of that nature. But, that's the idea with an LVN. There's, not all LVNs are created equally. This LVN should be controlled by buyers because, again, there's a whole lot of trapped sellers below here from yesterday, and that includes, the overnight session. Anybody that sold overnight, below Friday's cash hours low is stuck short. And so I just want to play against it. And we talked about this in our prior interviews. I want to trade against whoever is stuck, whoever's trapped, right? And in this case, at least for now, it's sellers from, Friday's cash hours low down to yesterday's low. And until they are untrapped, I will trade against them. So that's the idea for the trade. And if it works, I just, for me, I was out half for 6 because I was getting in the shower. So that seemed reasonable. And I got it in like 90 seconds. So just take that like in this kind of tape, like, okay, fine. And then took a quarter at like 34, I think, before I came on here. And I'm just sitting with my stop at 17. So like I'll eat 5 on a quarter position. Yeah, I don't care. That's the technical stop is 17 for me here. So that way I can lock in some profits. And the overall trade will remain green no matter what happens. So that's a lot of my risk management is I want to at least make sure the overall trade is green. A lot of people will move their runners to break even after taking profit. And in many instances, that's completely appropriate. For me, I'm either buying low of day, like actual low of day, or it's going a lot lower. And there's no reason why this couldn't come up here again, retest yesterday's high, because if sellers can't get through here and they're still stuck from here and they didn't cover right here, well, guess what? You can cover up here then. And that provides some of the lift. So, we're going to need to continue to see fresh sellers come in to defend any of these rips, or, I potentially get a runner up here to, let's say, 57.05. So that's my play. I like to find an area where I've got very, very well-defined risk. And for here, it was 17, and get some profit taken so that the trade is paid for, and just let a thin runner do its thing. So that's where I'm at this morning. And I don't care at all if it stopped. And if it runs, that's fantastic. And my day is done. So.
Got it. No, thank you for explaining that. And it's very clear to me. I don't trade this way, but I see that and I understand exactly why you're doing it. A question's coming up about the yen, the implications of why you're watching the yen. I'm going to have Tracy go into chat, our senior economist, and discuss more about that. I think it's important. Just quickly touch on a Pharm before we get into today's trade plan, why the yen is important for you to watch.
Yeah, it's definitely a Tracy question because, again, I'm kind of a moron. I'm just a price monkey. But generally you have currencies that are considered, but I do throw poop very accurately for a price monkey. But yeah, so, there are currencies that are considered like safer haven currencies. The yen is kind of one of those. And so, a lot of times when you see the yen strengthening, there are some others, right? You can look up, you can do a chat GPT, on currencies and funding currencies and safe haven currencies and all of that. That's definitely a Tracy thing. But generally a sign of potential risk off when you see some of those safe haven currencies bid relative to the dollar, particularly if it's not just overall broad weakness in the dollar, right? It's very different. The dollar itself is not bad. So, and again, and we talked about maybe the first week, this was about how specifically in this instance off the highs, I was watching USD JPY. Obviously, you're watching volatility. And then I was watching the 2-year note. And so for this whole sell-off, if you look at pretty much any time 2-year note price was bid, so yield down, and USD JPY was offered, you could just look at the yen if you want to. I'm sure would have been just fine. It's just I had USD JPY charted. Anytime you would see 2-year notes bid and USD JPY offered, you would see a volatility response with it. So it was very, very well correlated in that, when volatility was spiking, you could just look over at the twos and you can look at the yen, and it was moving, and equities would be down. And so, we talked about a couple of weeks ago on that initial low, which, I didn't like the structure and character of that low quite as much purely from a equities technical perspective, but I did see some of the things that I wanted to see in the 2-year notes in the yen at that low. And so that made me willing to sort of back off on shorts for a couple of weeks and see what we got. So that's why I will continue to watch it, because I think a lot of this cycle, there's concerns about growth. I mean, there's been a narrative. I mean, how many different narratives have there been off the highs? There's always a narrative. It's tariffs. It's a growth scare. It's the rest. It's the globalists, right? Which, I mean, it's funny. It's really stupid, but it's kind of a thing. Actually, it's kind of right in that there is a bid more towards rest of world instead of U.S. It's not like globalists are mad at Trump, but it's there's cash moving out of U.S. and equities into rest of the world. So part of that's true, and so for me, given part of it was growth. That's why I was looking at what I was looking at in terms of correlation. So like in 2022, I would have been looking at some of the opposite things, right? So I was looking at, 30-year bond price, 10-year bond price. And if that's getting sold, if that's being offered, it's because we were having inflation concerns. And if the dollar was bid, same type of thing. So in 2022, it was, 10s and 30s offered. Price, again, not yields, a dollar bid, and then equities offered. And so within each macro environment, I'm going to have my own macro thesis that's, almost surely wrong most of the time. But then I look to price to see if it is confirming that. And so again, 2022, you're looking at if bond yields are up, dollar is up, and equities are down, it's probably because we're concerned about inflation. And in this case, it's sort of the opposite. It seems like there's a bit of concern about growth and the impact of tariff and Trump's policies. And so that's where I'm at. So I'm going to continue to watch this. And USD JPY for me, 148.84. If we're making lower lows, lower highs below that, then I think there's a problem. And then on the flip side, and I do have a short position in it via FXY calls. If we clear, let's say 151.20, and we're making higher highs and higher lows above there, that I think it's probably a short-term all clear sign. Right now we're just ranging. It's a big old box on USD JPY.
Yep, we just got over a minute left. Quick trade plan coming into today. I think we get the gist of it, what you're looking at with volume profile, but talk us through what you'd be looking at into the U.S. Open.
Yeah, so if we do, come back to these lows and we get some kind of a look below and fail, again, let's call it like 17 to 22-ish, then I think you can consider a fresh long. So we just kind of weekend here, reclaim the overnight low. Sellers can't get it done. You're probably going to find a rotation. I mean, at least back up to where it's at now anyways, mid to high 30s, and probably get the rest of this move up towards the 60s. If we come in and we just can't get through the overnight low and you can find a bid there, then this same trade is still valid after the open. If we do come up here, we sweep yesterday's high and we can't sustain this bid, then I would probably say I'm using like 65 to 72, which you may recall was a super high time frame spot for me, was 65 to 75. So if we just kind of sweep up here and fail and then get sucked back into this range, then we're probably going to come right back down. So, these to me are the edges for this morning. Is basically 50, 56, 17, and 22. And let's call it, 65 to 72-ish are your edges. Fail to sustain through either side of the edge, rip it to the other side. So I'll fade either edge. I don't care.
Clear and concise as usual. The edge is in the edges. We've got Merritt coming up soon. Pharm Army, Pharm Navy. I'm thinking ahead with Tanya Army. Pharm Navy, give them the thumbs up and the like as we do it Monday through Thursday every morning from 8:30 to 9. Me and my boy Pharm. He took the power out today on his computer with his calves. Who knows what will happen tomorrow? You'll have to tune in to see. Pharm, thank you so much.
Have a good day, Billy.
Next up, we have a birthday girl here with us today. The one and only Tanya Traits. Happy birthday.
Thank you. Thank you. Yep, it is my birthday. And it's the start of a new quarter and start of the new month. It's going to be an interesting day here. Yeah. So we have, what's interesting is that NQ is so much weaker than ES yesterday. But today I think Pharm was talking about it as well, that he was looking at maybe like ES will come up and fail above yesterday's high. I see that NASDAQ already did take yesterday's high. I'm a little bit cautious of that, and then I'm going to take a look at the hourly. But I mean, we did get a pretty good bid back into the range yesterday. So if I look at the hourly time frame here, we did retrace here on ES and NASDAQ to about 50% or more of that fib of the range from the move down on Friday since 10 a.m., right? So I think now it's, yeah, I mean, I'm kind of neutral so far in the day. I'll have to see how we open, you guys, but we'll see. But ES retraced into here into this 62% to 76% of the range, and then failed to take out yesterday's high there. NASDAQ did. So it reminds me of, I think, Thursday, the same thing kind of happened so that could be a potential area indication of a further reversal. But here also, I think what I'm taking note is, ES took Asia low here by a few ticks, I believe. Yeah, by a few points, while NASDAQ put in a higher low. So there's like a couple of divergences there. I don't like it when there's a divergence on both sides like that. So that's why I'm sort of more neutral in the day, and I kind of do want to see what happens if in the first 15 minutes of the day. Let me see here. Right here on NASDAQ. And we have this hourly FEG also. I think actually looking at, it's funny how Pharm's charts, I do notice a lot of times I don't use volume profile, but a lot of times those gaps I highlight end up being, like gaps in the volume profile as well. Just always interesting to me. So it really depends to me what happens during the open. Are we going to hold this area? For me as well, what I'm looking at is, if this is the start of the pushback lower, if this is like the inkling of a first start of the reversal, then I'd want this hourly on NASDAQ to hold price lower, and I'd want to see a 5-minute shift from this area of interest. So if at the open we just sort of push through this and close strongly like above 50% of this, then I would pretty much discount that as more bearishness and instead look for more longs up into new highs of the session, and potentially then using like some standard deviations to see if we could retrace more deeper into this range. So that's my kind of outlook for the day. We'll see at the 15-minute right now what's going on here. Let's see. Yeah, for me, this area is pretty interesting to me on the NASDAQ from the 420s to like the 460s. Is this going to hold price lower? This is also the low before. This is what we call a bearish breaker. It's a low put in before this high was swept, and now we broke below this low. So, and that is also joining up with a couple of gaps here. So I want to see, does this end up holding price during pre-market lower, or during like the open? Are we going to just disregard this? Then I'd look for higher prices. I think, yeah, ES yesterday was stronger than the NASDAQ. So I wouldn't be opposed to, if I'm taking longs today, I'd probably stick with the S&P. And look at structure today for that, because, you know, yesterday ES took my targets quite quickly in the morning. Well, NASDAQ kind of fell asleep at the wheel, and then I ended up having to re-enter a couple of times on those longs. So we'll have to see what ends up happening today. It is the first day of the month and the day of the quarter. Anthony, can you remind me, are tariffs in effect today?
Well, tomorrow's Liberation Day, so tomorrow is the day that we get the announcement of
Okay.
exactly what we're looking at. So I know it's
Okay,
kind of
yeah.
difficult when you've got first day of the month, first day of the quarter, and then you got this tomorrow. So
Yeah, so that's what I wanted to make sure, that it's not today. Okay, great. It's tomorrow. So yeah, that kind of does push my bias a little bit more towards neutral also, because if there's sort of like a waiting game, then I also want to be waiting, you know? I think Pac said it as well, that he's cautious and waiting, so I'm not going to be too aggressive on each side. But those are my thoughts for today. Let me see also on NQ. Yeah, there's a little gap here. We held the price there. I'm probably more bullish than bearish, especially since we took out September lows on NASDAQ yesterday. We did retrace already 50% of that range of that move down on Friday, but I mean, it really depends on, like I said, if this ends up not holding price lower, then I'll be more inclined to take longs. And I'd take this as a higher low and a divergence, and I'd be okay with taking longs today. Yeah, I think that's my analysis. Let's see.
one of the
What are
things I was
chat
going to ask you
votes
today is coming in
Yeah.
just was which one was more favored to which direction? Because yesterday
Yeah.
I saw you hopping between the markets. So I guess obviously we have to wait to see how the market opens today. But
Yeah.
according to what you see this morning, is it more S&P more bullish versus NASDAQ or vice versa?
Right. But where we saw yesterday is that the S&P was more bullish, and we see that S&P retraced deeper into its range already. It retraced to 62%. NASDAQ hasn't quite yet. But that being said, with today's structure, though, ES took this low from Asia, and it failed to take that yesterday's high. So NASDAQ is looking stronger today, actually. So, yeah, I mean, it could be a faster tape on NASDAQ today. See that the chat voted 32% bullish, 30% bearish, and 38% neutral. People are split down the middle. That's pretty even split right there. Most people are neutral. Yeah. So I agree. This chat is pretty smart.
Yeah, I mean,
Yeah.
you don't often see 30, a third when you're looking
Yeah.
at bullish, bearish, neutral on our poll. It's always typically one is outweighing the other. That's pretty even today. Vote in the poll, everybody, so we
Yeah.
can get a full gauge of what
Yeah.
everyone's saying. It's pretty interesting.
I think so. And also, what I don't really, like I said, I don't like it when there's divergences both on the highs and the lows showing here. Like, okay, NASDAQ took this high, ES didn't, but ES took this low, NASDAQ did not. And then also with, I don't like it when it seems like we might be bouncing between two fair value gaps here with the bullish one and the bearish one here. I mean, it could end up, I wouldn't like it if we just end up bouncing back and forth between these two zones. That would kind of be an annoying day for me. So I'm kind of looking for a strong push above that, and like strong indication of higher prices and more momentum if we are going to go higher. Yeah. And looking for that, I would just be looking at mostly just displacement on the lower time frame there on the 5 or in the 2 minute. 1 minute too, but sometimes a 1 minute could trip you up.
Yeah, the NASDAQ to me today, looking at everything that you're showing us, if it does start to go up this morning, that's the one I
Yeah.
would favor as well for a rally. It looks like it has the one that would have the most momentum upward. What would
Yeah.
also be interesting is to see that all of them participate together today and you don't see divergence between them.
Yeah.
On Q1, I think that's a cleaner tape. Then you can almost pick which one you want, but I would still go NASDAQ.
I agree. I mean, it would be great if ES starts making higher highs and then gets rid of this divergence. It would be great. And then if we could hold against London highs and then take out yesterday's high as well, then everything would be in confluence then. And that is funny. The chat is acknowledging that I said that the chat is smart. Yeah, not all chats are created equal. But yeah, I think
Give yourself a
that
like, chat, for that on the YouTube channel. You guys did. It's pretty interesting. Again, it's bearish keeps losing numbers as the votes come in, and neutral is actually gaining on the total percentage. Neutral or bullish.
Oh, interesting. As time is going by, it typically does go according to whatever's the last like bar on the on the chart. But we are coming into my point of interest here. In the morning, like this bearish zone that I have marked out. If we start to disregard it and start really pushing up through it, especially half of it, if we close above half of it, I'd be quite happy with that for more upside. So the end of this hourly candle, I would want to know what this, at 10 a.m., what does the hourly candle look like? If we just wick it, then I'm not going to love that. And today is Tuesday, and we have 10. Oh, you know what? We have 10 a.m. News. That could definitely affect the markets. Oh, we have also 9:45 a.m. news. Okay, but we have 10 a.m. red folder. So really, yeah, I really want to see what this hourly candle looks like at 10 a.m. I might end up just watching price first. Yeah, for the first 15 minutes, I typically don't really take a trade anyway. So by that time, I'll see what this candle does in this zone. Looks like ES is already pushing back up in it. NASDAQ is just coming back into it now. But I really think it is important to me to see this is 15-minute bearish breaker hold. I'd want 50% of it to hold. So pretty much, yeah, if we close above 50% of this range here that I've marked out on the hourly. So if we close above like 430s on the 15, strongly above, then I'd be more bullish today. I already am quite a little bit more inclined towards the bullish, but I am still, mostly neutral. Mhm.
So, with just under 2 minutes to go, I want to ask you a couple quick questions. I know you are someone who follows your stats diligently, and one of the questions came up in chat, and I was thinking about this as well. Is trading on your birthday typically a good day for you? You also have first day of the month and first day of the quarter on your birthday. It's kind of a interesting day to have. Have you traded on your birthday in the past?
Yeah, I think I have. Maybe I don't know. I have to take a look at last year. Did I take a trade? Maybe I decided not to even do it to like sort of not put myself in a bad mood or something. And it was my first year streaming, but I will definitely be trading. That shouldn't be affecting it. Honestly, I keep forgetting that it is my birthday, so I'll probably forget until I take a look at my chat and then I'll see all the cake emojis. But my stats, I don't really know that because that's just like such a specific day. I know my CPI stats. I love CPI days. It's my favorite. I'm like 10 for 13 on the last 13 CPIs. But for my birthday, I've traded 4 birthdays or 5. And I do not know that, those stats. Hopefully, today will be 1
Yeah.
for 1.
Well, cool. Well, we wish you the happiest of birthdays. It's too bad you're not here. I would have taken you out for a nice
Oh,
bottle of wine, and we're gonna
oh,
learn more
thank you.
about your wine. And you've been going through becoming not a
Yeah,
sommelier, but you've been,
I've
or
been doing.
have you
I'm going
been
to 2 more
like
wine
taking it to
tasting
that
classes
extent?
this month. Yeah, I will be going to 2 more wine tasting classes this month, and also for I'm going to be visiting my brother in the Bay Area. He works in like big tech. For Easter, I told him I want to go to Napa Valley, so we're going to do that too.
Yeah.
It's going to be fun. So
Well,
appreciate the
have a
birthday
blast.
wishes. Thank you.
Happy birthday, Tanya, and we will
Thank
see
you.
you tomorrow. All right, everybody, that time has come. Mr. Apteros himself, the man, Merritt. We don't know, is he going to have a mustache, a beard? There it is. He's growing. I don't know if it's like, I'm wondering, I'm like, is he going to start growing it in now, or where are we with this? But you got a US Open hat on.
You know, winter time's over. It's time to clean it up a little bit, time to come out of the cave, you know. You typically start this segment by making fun of the lack of pigment in my skin. So I appreciate you sparing me there today. Happy Liberation Day Eve, man.
I mean,
Here we go.
yeah, I mean, look at you, look at me. Look at this glow. I mean, look at that. That's the Midwest tan right there. That's why I moved south, man. You got to make that
You realize
trade.
Nashville's not the Midwest, right? You say that all the time. You realize Nashville's the
No,
South.
I know, but well, I'm really in the south, but
No, you're
you're
not.
right.
You're
You know,
so
and it's
far
so funny.
down. You're in the North.
Yeah. Yeah, well, I mean, the South is where it is, man. This far south, this is like the Caribbean life out here.
That's where
It's
people
funny
are
every time
moving.
people
Oh,
come to
yeah.
live. Yeah. But anyway, today we've got interesting. You heard us yesterday, end of the quarter, end of the month. Today, beginning of the quarter, beginning of the month. Any of this stuff that's all these crosswinds, all these things, we know none of this stuff really
I don't
necessarily
care.
matters to you too much. You're so hyper focused on your strategy, and I get that, and I love that. But tomorrow with the Liberation Day and today Q1, I mean, any thoughts coming into this at all? Does it take any account into what you're doing?
I see it as the news cycle. You know, I see it as the next little bit of headline risk, a little bit of uncertainty. But my goodness, when are the markets not dealing with uncertainty? When are the markets not dealing with
When are they
the
ever
next
certain?
headline risk? I understand it's been amplified lately and things are being politically shook up more than usual, but same story, different day, man. As traders, our job is to show up, understand the risks, accept the risks, manage the risks, and let the profits take care of themselves. I sound like I had some bullet points, was prepared to say that. But that's the job, man. That's the job.
No, I agree with you. I mean, we go over a lot of this stuff to give people an understanding of what's happening within the environment. But if you're short-term
Yep.
day trading, a lot of this stuff is way secondary to you. It's more about understanding what's going on in the marketplace. For me, it's the biggest thing when it comes to this stuff. And I've moved back to more swing trading, as you know. It's just it's position sizing for me, and like it's also comes down to, you know, do I want to take positions into an overnight with this going on? Do I want to be, you know, how aggressive do I want to be on an ad or an entry when I know that there's headline risk in the forefront
Yep.
of the news? And also,
Absolutely.
is on day one of the quarter, like what is the market signaling to us? You know, you see bonds.
I heard
up,
you say
see
that
gold
earlier. I
up, you
thought that
see
was a really
silver up.
interesting take.
Yeah, I mean, let's go to the charts now, maybe, and check out what Merritt's got. I'd be curious to see what he's looking at.
I think that same level that Pharm was looking at earlier, we had a really nice LVN here from yesterday. I think if you're just a short-term trader and you're trying to assess, you know, what's going on, to get a little bit of just what I'll call short-term context, where do we trade today relative to this upper distribution and the lower distribution? I know we've got a nice little LVN right there as well. So, you know, that there's really three distributions to yesterday's profile. but this one right here being a big one, and that's where we have the overnight low. That's where this market is currently holding. So, just for a plain, simple line in the sand for short-term traders, that could be nice. But you also got to watch this upper edge, right? Actually, I forget who said it on the stream earlier. I had it on in the background. But I put out the tweet yesterday. Yeah, I love to play the bad boy. I don't know if you know this, but they like to be cautious. They like to be careful and conservative. And I like to just try to be a little bold. I like to go for it. I don't know if you've noticed that about me. Anyways, but look, it's important that we have this it's important what someone said earlier, that the bulls haven't actually accomplished much yet. So let's look at the context of these 2 days. Let's get both days in the view here. 3 days, essentially, right? We can see that there's some lows here. Boom, they break it down, consolidate, gap down, right? Which is more downward movement. What did the bulls do? They simply retraced to that VPOC, essentially that most traded price from Friday. What happens now, right? So the bulls haven't taken control of this market. In order for the bulls to take control from a profile perspective, we need to start to see price accept. That's kind of one of my NADRO terms. We could say that hold into above prior areas of value. The sellers are fully in control until that happens. Yeah, did I put out the tweet yesterday? I'm so bullish it hurts. Yes. Do I still feel that way? Yes. But that's more of my VWAPs framework that's telling me that. We got into some real extremes across multiple time frames. It's hard to make money going with that. I tend to think of the market in terms of energy. How much energy is required to keep moving a market directionally? The market only has so much energy before that rubber band has to come back, at least temporarily. So I think we're in a rubber band coming back temporarily type situation. And I think what myself here have said and some of your prior guests have also said around where are we relative to some of these recent distributions it's a good view to take into the session today.
One of the things that came up this morning, and I asked the chat, was yesterday's low a good low? And the reason why I asked this is because I've talked about this a little bit. When the market has its eyes on a low, the head gets focused on the low, and the market just keeps going in that direction. Same thing when it gets a high. And when a good low is made, I feel like the head can turn, and then the bigger players start focusing on the other direction. So to me, it's not necessarily that it changes much, that we can't go lower near the low to test it. But I think it's important when we make a significant lower high, according to guys like you and your work, that it helps define changes within short-term trends, mean reversions. Do you think yesterday's low was a good low?
It's the short answer is yes. I think it was at a place that was very logical. Again, kind of some of the VWAP frameworks that I'm using. I was, again, go check the timestamp on the tweet, how bullish I was from those areas before the low was put in, right? I made the tweet before we actually made that opening drive lower and then reversed. So I was looking for that. That's one thing. You can actually get good enough at analysis in ways, and that's what we use NADRO for, to actually have some healthy expectations around, look, if we start to see a bounce from this area, that's probably a good low, right? Even before it happens. That's one thing about trading is we don't predict, but you want to be very acutely aware of if something happens in a certain area, which we might be looking for in advance, then it's really significant. And so that to me is kind of what happened. In terms of, is it a good low? My brain almost froze when you asked that, because it's a very complicated question. Because again, I think we're in mean reversion mode temporarily within a bigger picture bearish environment. So is it a good low? Depends on what time frame you're asking. But for the simple answer, yeah, it's a nice low where there's a nice kind of wick, right? Versus the past low we didn't like. Nobody liked it because it was kind of a double bottom. If you think double bottoms are bullish, and if you think double tops are bearish, I'm here today to tell you, you're wrong. Those are not what they are classically taught in terms of bullish or bearish. Better lows come in, and it's go look up auction market theory and go study that theory a little bit. It's not magic. It's not rocket science. It's basic logic for how an auction process works, whether it's at an art gallery or a car dealership or financial markets. If price goes down and people are so interested in those prices that it's so becomes so competitive, like yesterday, that they start to stumble all over themselves to buy it up, which is what we saw. That is the dynamic of a good low. So price isn't able to print as much volume in those areas because it's so competitive, it leaves. Price isn't able to spend as much time down at those areas for TPO profile people, so it doesn't print a big distribution, it prints excess. When we see signs of that, that is the hallmark of a good low, and that is what we saw yesterday. Will that be the low? Who knows? Who cares? Like I said, we come back to our analysis, back to our methodology to find simple areas where we can put on skewed risk-reward trades within this whole picture or environment.
I love the way you laid that out. I agree with you 100%. I've never looked at a double bottom and said that's a great low, right? I mean, I always look at
why could we
lows
get
that
back
have
down
the
there?
wicks that
Triple
have-
bottom. Why could we get down here for the third time? Well, price trade is being facilitated at those levels.
Yep. Well, I'm going to leave you here on that note. I'm just going to be watching you throughout the day. You know, I love watching your streams.
Sounds creepy.
I can't wait to see what happens throughout the day. Yeah, well, it is kind of creepy. I'm in the production room, just sitting there, you know, having an espresso, watching Merritt. Man, what do you want me to do, man?
Just
I'll be in the
life,
chat,
baby,
and
just living the dream.
that's it. I'm going to go pour. I'm going to pour an espresso, and I'm going to watch you, and I'm going to be, you know, now I'm going to be talking about you in chat. So there you go. So anyway,
I look
my
forward to
brother,
seeing
it's
the
all
troll.
you. And Tracy will be back in here for the data to announce it. So if you see Shy Girl pop in at some point, it's for her to deliver the data. And we'll be mindful of you being in a trade, as you know, and everybody knows that this is all about the trader segment, trading the open. So give my boy Merritt some love. Hit that like button if you're on social. Also share it so more people can come in and tune in to my guy Merritt trading the open today. Thank you, my brother, and I will talk to you later. I will see you soon.
Cheers, Deli. I assume we'll see what happens. A couple minutes till the open here. 2 minutes, 40 seconds. I assume this is going to be a quieter session for me today than the past two have been. This is, we'll see. We're chopping around here in the middle of this area of developing value. So nothing that I'm stalking, nothing that I'm doing here right now. We'll see what happens if we come down into some of these lower extremes for the session. The thing about that gives me a trepidation is the same concept we talked about just a moment ago. How good is a low? Well, instead of looking at that on a daily bar chart time frame or whatever long, or even like this 30-minute chart, okay, look, good looking low, right? Well, now let's apply the same analysis. It doesn't change. We just use multiple time frames to look at different things. How good is this overnight low? Oh, it's decent, right? We weren't able to retrace when we came back down to test it. We had this little bit of excess that remained here. So if that can hold, you know, that puts targets up here. The problem is, and just so you guys can see what my eyes are seeing, see if this is working. There we go. A little thicker. There we go. So this distribution that we've been talking about, right? Well, it's essentially here to here. That's what we've now done in the overnight session. So we went and tagged it. And what's the expectation? The expectation is to run to the other side, the upside of it. And guess what? That's what we did. Running stops, anybody who was positioned short, any insane people who shorted quarter end volatility highs right there. Not very many, but anyways, we got them. And now that's why, so that takes us into the open here momentarily, about 12 seconds. And the market's kind of done what it could give us in terms of freshness and reacting to that distribution. So that trade's kind of over, right? It's already been done in a sense. So doesn't mean we can't go for it again. But one thing that we teach with my guys is spectrum of opportunity, right? What is the quality? We may have a certain dynamic that's playing out with distributions or whatever that offer risk reward asymmetry, but they're not all created equal. They're not all the same degree of quality in terms of opportunity. All right. One thing we have noted is a real lack of sellers on all the down moves today. And that is persisting into the open. Bigger picture, this is the weekly type VWAP chart here. So its prior value is all the way up here where this square is. So we could continue this dynamic I talked about with Crudele there was reversion. This is a reversion, right? Even if we get a huge bounce for a couple days or whatever, it's still a short-term up move within an overall down move, right? No matter how you define that, whether it's price-based or value migration-based or whatever you're looking at, it's there's a lot of overlap in these things. Strong buying, you see the delta there pressing new highs. So some of perhaps my students will say, Merritt, why didn't you take this a little extreme fade long here? We had weak selling into it. You mentioned from lower extreme, nothing to do in the middle, but from lower extreme, you could be interested in that. Yeah, but given the spectrum of opportunity that I had mentioned there, I wanted to see a little bit of a trap. I wanted to see a little bit of a sellers think they've got it. Oh, gotcha. No, you don't type of bottom to kind of pull the trigger on a long there. And it really just kind of was mushy coming into there, right? So we didn't really get that type of additional trigger that I needed to get involved. Not a short I'm interested in by any means. So just to reiterate, we have a nice distribution from 484 to 324. And that is, we are just bouncing around in there, right? I'm just kind of rehashing what I brought up earlier. We could do a little region highlight from here to here, just to show you what I'm talking about. So nothing changes. It's kind of like when a market opens in yesterday's value area. Those of you who've read, Jim Dalton's books and whatnot, you understand that those are typically lower opportunity environments when you open in the middle of prior value because the market's saying, well, nothing's changed. Nothing's changed. There's not a reason why price has gone somewhere else and accepted outside of that area. So that's kind of what we're dealing with here. Could be in for quite a bit of chop. Doesn't mean we won't be able to pick off a few scalps here and there. If we come in and run some stops through here and the sellers are still weak, I could look at putting on a little scalp type long. We'll see. Oh, Crudele, since I know you're watching me with your pinky up in the air with your espresso, I don't know if this is helpful or if also some of the crew thinks it was helpful, but I went in and changed the settings to where the font for this chart was much, much, much bigger. So I know that's been some feedback we've gotten is that it's hard to see some of the numbers and charts and stuff. So hopefully this is a little better. Emiliano says, I really think today's market is going to make a new low. Tell us why. Why is that? Do tell. I've got Tyler Hero in my head right now. A little pregame warm-up jam. Yeah, I am. A lot of people don't know, but I am running on Mac here. I guess you could notice from the top right toolbar up there. But I'm running Ninja on parallels. Works good. Honestly, Flavius, if you're interested in how I scratch and whatnot, number one, if you want to hear me talk about it for hours and hours, the scalping course is where I go through that. But in general, number two, the second best way to learn it is to go watch the past stream recordings of me actually trading and scratching. And you'll hear me walk through the thinking and whatnot in real time. So there was looking for, again, a little more of a stop run. So I'm not gonna chase this long here. Just want to see. Now we have a double bottom, right? Don't love that. But look, it's the scratching, it's a great question, and I do want to give you some value here today rather than just telling you to buy my course like a jerk. Um, it depends on the situation. It's very important. By the way, I'm still waiting on Emiliano or whatever your name was. Why are we going to make that new low? Let's back it up. You make the statement. Let's hear it. Scratching is very, very dangerous for new traders. Scratching is should be, in my opinion, very dependent on the play, the trade that you're taking. There are trades that should call for us to be very hands off. Let the market stop us out if it's going to stop us out. There are trades where we're a bit compromised. It's more of a scalp and these kind of things where it's not a high conviction trade, let's call it. Even though I don't believe in high conviction trades, I'm just using some general nomenclature to help everybody be on the same page. Those are trades where you need to go into it with the idea that at the first sign of problem, the first sign of weakness against your trade or strength against your trade, we could call it as order flow people, you're bailing, you're scratching, right? Versus this really, really well-crafted, confluent A+ idea. Let's not be so quick to scratch those trades, right? So that's my general philosophy on it. The actual dynamic and mechanics of doing so would require me to teach you about reading order flow, speed of the tape, knowing situational awareness. Like, for example, if we were getting long here, we would know that there's this uncomfortable little double bottom here, which could be vulnerable to stop run. It's, it happened pretty quick. It's not the worst thing ever. But if there was a really vulnerable high or low and you're getting long in front of it or short in front of it, you know that you're vulnerable to being the sucker that gets stopped out on that stop run through that. So I would want to scratch prior to just having a stop under those lows that are vulnerable and whatnot. So situational awareness, it's a very, very complex topic. Chat saying somebody wake me up when the market wakes up. Yes, but how good is it to have some nice tools and understanding, more importantly, of the tools and market dynamics of understanding where we're opening within a distribution that chop is likely, that we're not as interested. I come on the stream and I say, today's probably going to be a quieter session here. How nice is it to have tools and to understand and know that, so you're not chopping yourself up in a little back and forth open like this. There's times where I fire up the charts and I'm already in a market pre-market or in a trade pre-market. I'm already I'm banging in at the open. I'm active. Context, 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 context. That's how you know what tactics to apply, when to sit on your hands, all that good stuff. So we're right. We have whatever it is, PMI, whatever it is, here in a minute and a half. So, not stalking any trades here, so I can answer some of these questions. Vlad is asking about level 1 versus level 2 data. You know, there's some people who say you can't trade without level two. Level two simply shows you the depth of market versus just what's called top of book. I have no need for depth personally. I don't care what in terms of order flow, you have different people who use different types of order flow. I don't personally don't find a dome valuable. I don't find seeing where there's depth showing in the level two data. I don't find that valuable. Um, in terms of order flow, I care about what's actually being done rather than what's being advertised that might be done. That's just me, though. Okay. The news evidently didn't matter much. And we do have, as we've mentioned on this stream today, the JOLTS jobs numbers at the top of the hour here in 15. Yeah, I'm pretty sure there was news at 8:45 and Central here, and then there was news. There's also news at 10. So something would be weird if the news wasn't released for the 8:45 yet. But again, I don't care. All the talking heads, guys, everything. You got to know what matters for you and your trading. I'm not saying that no news ever matters. I'm not saying that. I'm not saying that you can't be the world's best trader ever and trade off of news. I'm not saying any of that. I'm saying you got to know for your trading what pieces of information matter, and then you have to mature as a trader to the point where things outside of your process no longer take up your energy, your time, your attention. You have to dedicate yourself to what works and what you're doing. The pattern in the order flow has remained the same, as you can see, with the delta heading higher and higher. Each one of the down legs has not been accompanied by much selling. The buyers are much more aggressive here this morning. It doesn't mean they'll necessarily win. At a certain point, we could start to see them get absorbed or whatever. But right now, up rotations, strong aggressive buying, down rotations, not so much. Usually on these streams, I've taken about 10 trades by now, but it's not the situation for it today. I could have bought this turn right here. It did come and take out that low. I was just looking for energy, looking for feeling that turn. One thing I teach in our mentoring small groups is one of the skills we talk about. We give our mentoring guys a group of, it's about a dozen skills that you need to master, that you need to get really good at. And I have them self-rate themselves each day on each of those skills, rate it 1 through 5. And one of those skills is what we call short-term skills. And one of the components of short-term skills is believability of a turn. Do you believe this shift in momentum? Is it believable? Is it trustworthy? And I know that sounds very vague, but there's a real skill in that. For short-term traders who trade pullbacks, one of the biggest skills that you need to acquire is the ability to differentiate between, okay, The couple bars have been heading down. Now we start to see some upward movement. Is it believable? How can you tell if it's believable? Well, what's the stop run situation? What's the speed of the tape? What is the order flow, the delta doing? Basic price action elements, right? Is it a doji within the prior bar? That's not much of a momentum shift. Hans asks one of the most common questions about cumulative delta. What's the deal when cumulative delta is just going one direction and price is going sideways or the opposite direction? What's the deal with that? Well, that is when you have a passive participant or participants that are dominating the market. So, for example, delta continues to head lower all day while price heads higher all day, for example. Doesn't happen often, but it does happen. Well, what do you have? So you have delta going down. That is aggressive sellers hitting the bids, but price is going higher. So what's happening? You have passive buyers who are absorbing the aggressive sellers. And then the passive buyers are so strong, they step up to the next price level and people sell into that and they step up to the next level. So price is going higher and there's more volume being done at the bid. So delta shows us a lower read. It just simply tells you there's passive dominance in that market. That's all it says. Is that outright usable at a moment for a day trader? Do you say, oh, passive participation, do something? No, you don't. You can in very short-term moments, one single bar, slam, 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 slam. Oh, look, they're not able to take it lower. A lot of these aggressive sellers are now trapped and they might squeeze them. That's a scalpy opportunity. But the all day long discrepancy, divergence in delta versus price is not a tradable opportunity, in my opinion. Noting that it's, for example, if you're looking to go with that uptrend, that's a passively dominated uptrend, and you're taking a pullback trade to do so, as long as nothing changes, you feel good about that in terms of does order flow support the thesis? Passive buyer is still there. Things are still normal for today's action. If all of a sudden something changes and the who's dominating in terms of aggressive participation from one side or the other changes, that could be something that signifies, hey, maybe that big firm or whatever who was working that order for, that algo is now turned off and the dynamic of the market is changing. You can see that in the delta, and it could have implications for your trade idea or whatnot. Well, I'd rather be trading than teaching, quite frankly, but hopefully you guys are enjoying the banter. Please support the channel, guys. There's currently 6 likes. That's embarrassing. Please hit the little thumbs up button on YouTube and give it a like if you appreciate what Crudele and the team, myself, all the other people are doing here. Please hit that thumbs up button. Oh, I guess it's from when I signed on this morning. It's still showing. Sorry. But either way, hit the likes. If you don't like what we're doing here, don't subscribe. If you like it, support the channel. The action in NQ here is not it's not terrible. It's really not. For a chop zone in the middle of yesterday's uppermost distribution, the movement is not terrible. It's not like you see all these just total bar-to-bar overlaps, tries to go up, down, just chop fest. It's a chop fest, but with decent small rotations, at least on this 1500 volume chart. So that's good news for the session here. It's not totally dead. Volume so far today is very average for what we've seen so far today. Yeah, you can trade overnight session in our tryout for sure. You just can't hold into exchange resets. What's the difference between a volume chart and a tick chart? Well, if let's just say there you have 100 volume chart, right, and 100 tick chart. It would be just like 100-minute chart, okay? It's just a unit. 100 volume chart will bar will complete when there's been 100 contracts that have traded. That could happen in one tick. 100 lot, boom, filled. That volume bar is done, and you're printing a new volume bar. If it's 100 ticks, it might take 100 lots to come in, because that each order fill in the market, each agreed upon simultaneous buy and sell by two participants, could have any number of volume of contracts attached to it, but it's still one tick. So volume is a little more sensitive to how much is being traded, whereas ticks are printing more when there's simply more activity. Are they very correlated? Yes, they are. I've got a book next to me here on machine learning, and that guy preferred volume charts, like in a very sophisticated, quantitative way. In fact, it wasn't volume charts. The volume charts was second best. The best was product dollar-based volume charts, some type of like, what is the value of the product by the volume, and then like kind of like a different type of bar there. It's pretty interesting. I assume we're going to hear from Tracy here in a moment as we brace for this jobs number. Honestly, today is a good day to look at some other markets. It's easy to just dig into one market when volatility is so nice these days. You can get away with trading one thing, and it can be great. When things slow down, I move personally to multi-market. I follow a dozen markets and look for that. What happens when you pass the tryout? You join the desk. I don't know what else there could be. Set you up a sub account and get you rolling.
Hey, Merritt, how are you?
Hey, Tracy, good. How's it going?
All right, we have
They got
numbers
you lit
coming
up now?
here. And just, I think so. Yes, I look better, right? All right, we have the numbers for Jolt job openings. Came in at 7568. Expected was 7655, so much lower than expected. Jolt's quit level was 3195. Expected was 3186, pretty in line. And layoffs came in at 1790 versus 1714K. So we may be seeing some of these federal workers come in on these layoff numbers. And then last we have ISM manufacturing came in at 49.0. Expected was 49.5. And that is your data.
Any significance to you? First reaction?
I think, I think the job openings being higher than expected or that much lower than expected was interesting. And then I think, again, those layoffs, I think we're now really starting to see those federal worker layoffs come into play.
Awesome.
All right. I'll
Market
let you
very
at it.
muted. Thanks, Tracy. Very muted response here. A little wiggle up, a little wiggle down. We're still stuck in the distribution. Note a little dynamic in the order flow since we were last talking about it. We actually saw some decent selling on the down move. We'll just call it a little bit normal on the buying. But anyways, we're actually seeing sellers now on down rotations. Maybe some of that was a little just reducing positions in front of that number. But just wanted to point it out. Notice the difference. Isn't that what traders do? We notice a difference or notice when something is a certain thing, pattern recognition. All right, let's get involved here. So as you know, I wanted the stop run through those lows before where that emergency stop I have in place is. Good buying on the tape since the entry. So this is a position someone asked about scratching earlier. This is a prime candidate for a scratch. I do feel like below those 340s right there, we could easily run some stops. So if we can't get good follow through on this position, we're in a chop zone. This is a low opportunity play. What's the situation, as we talked about with scratching? So This one will need to behave. We'll scratch it out. I liked that that entry though for the situation. Little bit of a wick down at this lower extreme. We kind of had some bars where they didn't really look that good, and then we had the double bottom. This one was very mushy just after the open. This one felt a little cleaner, right? You actually had the sellers that were pressing, and then all of a sudden there was that stall and kind of reverse. Just didn't get clean momentum following it. And so we scratched it out. But I like that entry for the very mediocre opportunity that it was. Ferris, that's a good question. I assume it comes from a place of thinking that a lot of the Apteros desk is kind of Nadro based. That's the thing people don't understand about Nadro until you're really in it, is that Nadro is not some moving average crossover system where everybody does the same thing. Nadro is a big collection of frameworks that I think have really nice incremental edge to them that you can make your own and kind of pick and choose. Sellers still activated here. We are running those stops, so we'll keep a close eye on this. But it's not the one size fits all for everyone. So no, we're not often taking the exact same trades. People trade different markets. Some people scalp, some people don't. They trade more intraday position trading. Some people scale into orders. Some people are all in. Some people scale out. Some people are all out. You know, there's a bunch of ways to do it. All right, let's hop back in here. Little uncertain about how this is looking here. Market's a little herky-jerky right now, not trading very smooth. Probably going to come out of this. Yeah, didn't like the way that was behaving. We can always stand aside and let it, I think we're not done running stops. If this market was not in this distribution and was moving faster, could bang in a little bit here to actually hunt those stops. It's something I like to do at times. Yeah, I have tryout folks, desk folks who trade with Ninja via a rhythmic connection. It's no problem. I am going to go for this stop run here. See what we can squeeze from it. Not the best movement today. This thing still looks good, but it's just not great. That's a little better. Peeled off a third. Peeled off another third. Just a little stop run scalp. You know, obviously we could get lucky if it tanks from here, but weekly VWAP just below here. I'm assuming we're going to 80% chance I scratch out of the remaining bit of this kind of around our entry as the buyers. You know, at this point, the stop run was completed, at least the initial phase of it. And so there you go. So we'll come out of the rest of that. The topic of areas, not lines, comes up in my mind right now. Just because we get a couple ticks or a couple points or whatever below this box that I drew, that doesn't mean that I'm bearish. That doesn't mean that it's, you know, I sensed the stop run there and we profited from that. But we are, if you go back and look at this, we are still just kind of into this low volume zone here, right? Areas, not lines. Areas, not lines. Very important. If you haven't learned that lesson yet, learn it quickly. Be loose with areas. That's the concept of acceptance that we teach in NADRO, is how to read the rhythm and then how to apply it to areas, references, overnight high, overnight low, yesterday's value, last week's value, an LVN from yesterday, whatever it is, and then how to really determine at what type of movement would cause us to change our view about being, essentially, whether we're into support or whether that support turns to resistance. We have a very specific way of doing that that's very powerful. Yeah, so Michael in the chat says single prints from yesterday just filled on NQ. Absolutely. Same thing, just said a different way, right? So here's this low volume area on a market TPO profile. Those are single prints because we only, in fact, we don't even need profiles. Here it is. You have all these bars clustered here. You have all these bars clustered from this point and higher. Well, guess what? There's your single print right there, right? Only one 30-minute period because this is a 30-minute chart. So we just closed out all those singles. We're into that LVN. It's all the same stuff. By the way, is that a is that a fair value gap? That is that what that is? I don't know. My understanding of the ICT stuff is that it's regurgitated from stuff from the 80s all the way through today. Just renamed. All right. I kind of like this spot to buy this thing. Let's get in some. I'm a bit late here. Let's see if this direct momentum can persist. We'll have to come out. The sellers came roaring back right there. We might, as I mentioned, need to get to that weekly VWAP. Be an interesting point as they kind of come together there. Tried the long once more and scratched it quickly. This low's a little vulnerable, but they're trying to bounce it, so we gotta participate. Sellers able to do much more than buyers during that period there. So scratching it once more. Now we are seeing a little bit of uglier bar-to-bar overlap over the past, getting close to 10 bars here or whatnot. Let's see a little stop run through these lows, a little failure. Could scalp another short there to run these lows. I'm not going to do it because of how choppy the action is. So let's talk about the downside scenario. Chat asking me, why don't I go for shorts? So again, it goes back to that acceptance picture. If we start to accept and really hold into and below kind of this 295 area, and then perhaps a pullback into that 295 to 330 area, that little zone, that's the area of interest. But right now, we're still just testing the LVN from above. That hasn't changed. Areas, not lines. I'm slow to shift that bias from a reference rather than, oh, look, a tick above, a tick below, a tick below, a tick below. That's a great way to get really, really chopped up. So it is interesting to note how there was no sellers, no sellers, no sellers, and all of a sudden the sellers did take control, and that's kind of really matched up with price movement. That's definitely a good order flow type of day, a little bit more reliable than some of the other ways. We're getting at the tail end of potential opportunity for the longs. Give it another shot here. Healthy buying. Such a great trade location here for longs in this space. It's now after we've taken out the overnight low, all the kind of the stops have been run. So it's kind of now or never for this bull thesis to work. And it's kind of now the best that it's been so far. And correct, as chat said, we did actually wick that weekly VWAP, so a little bit of confluence there for that. Buyers reacting. I have a Discord, but it's only for students. So if you want to be in our Discord, you can join our community by either being a NADRO student or a scalper student. We do not want a free-for-all chat where any random person can come in and mess with the vibe. We have a very, very good thing going with our community. It's only for students. Good spot to take a little scale. I don't really want to, but good spot to scale there, so we'll do so. My process is a better trader than I am. Yes, we do have a separate area for desk traders. Our whole junior desk is on a our if you pass our tryout and get onto our desk, you get access to all of our courses at no cost. You get access to all the student Discord areas and whatnot, and you also get your access to our desk trader only Discord channel. So really, this is the spot where if sellers are going to be in control, this is kind of the spot where they'll likely take it and maintain it. If that was just going to be a head fake that ripped the lows and kind of trapped some people and stopped some people out, then we're back up to 19,500, so. Yeah, it's funny. Ninja calls them order flow VWAP, but I guess because it's, a volume based volume, essentially a volume weighted moving average, right? Volume weighted average price. I don't consider the standard deviations around VWAP as an order flow tool, but yeah, this is 1 standard deviation and 2. So really now's that point in the trade where if some students are here, what question do I now ask? Let's see what. Thank you, Ryan. a, a student I recognize. Some of the, let's see what happens? Question mark. No, that's not what we ask. Let's see what happens. That doesn't help anybody. Um, as Ryan pointed out, let's see what sellers have. This is the moment in the trade, and here they are, by the way, right? Delta heading quite a bit lower, quite sharply. Price moving down with it. Let's see what sellers have here. The buyers got their up rotation, decent rhythm move, decent distance move. Let's see what sellers can do here. And right now, I do not like what I'm seeing from the sellers because I'm long, right? So I'm going to put my fingers back on the triggers and see what happens here. If they continue to slam this thing anywhere near where I got in, we'll bail on it. Could be one of those things where it's just a little, there's a lot of noise in trading. Could be just some sharper selling there, and it doesn't actually result in anything. The thing is that we're in a position of strength right here. Let's go back to the scalping, the scratching conversation today, guys. How many positions have I been in today where I said I'm in a position of strength? The correct answer is only this one. We have secured a ridiculously good trade location, and there is power in that. I am comfortable. I can handle noise. I can handle chaos. I can handle choppy price action because my trade location is so good. So let's see what buyers have here compared to that strong selling that we saw, right? So the delta really sharply pushed down there, sharper than I would have liked to have seen. Perfect world, we get this little bull flag kind of move down and there's nobody really hitting the bids. That's where you add to a trade. We didn't get that here. We saw some sharp selling. So let's see if buyers can take back control. So far they can't. My edge comes from the edges. We just stepped into C period here, the third 30-minute period of the session, the pit session, that is. buyers are still struggle busing higher. I know price is higher, but delta's not, right? Little bit of a false divergence there because the selling was so strong, so we're a little artificially low on delta temporarily, but not a ton of buying behind this leg directly. Why not end the trade here? Bros Clops, you can rewind and listen to what I said about adding or not. I've already discussed that, but why not end the trade here, asks Yatharth. Well, for NADRO traders, we have what's called laws of market dynamics. I'm sure you can go find those for free out there, as people have, we'll call it, repurposed those around town. But our expectation, why have I even put on the trades I've put on? Why am I still in this trade? The expectations are for more of the same. And what is the current dynamic? It is rotational, rotating back and forth, that is, rotational around yesterday's upper distribution. So I am long from the lowermost edge of that distribution, and I'm looking for a traversal of that distribution. Is this some fantastic A+ trade? No, it's not. It's the best one that's been presented today. But at this point, and this is something I teach all the time, if you'll notice, well, I guess you can't see, but my arms are crossed on my chest here. I don't have my fingers on the trigger. I'm not staring intently at every blip of the tape or the order flow. I don't care about those things anymore. Right? Now, something could drastically change. News could hit the wire. We could be canceling Liberation Day. What would we do if we canceled Liberation Day? And at that point, I'll put my hands on the trigger and I might call an audible. I might scratch. I might add. I might do something, right? Oh, don't get me started on this one, Ferris. Move the stop? Should we move the stop? No, 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 no. One of the worst trade killers, trader performance killers out there is this just mentally weak need to remove the discomfort of having risk on, move to break even, move the stop up, trail the stop constantly. You know, go all the way back to Jesse Livermore, guys. It's the real winning is in the waiting. It's in the holding. It's in the doing nothing when you're in a good trade, those kind of things. It's not, oh my gosh, I can't let this thing retrace against me at all. Let's continue to trail this stop. Let's get it to break even. Let's move it higher. Different. Go back and look at the difference in last week's stream. These streams are recorded. They're, in fact, in real time. If you want to go back 10 seconds right now, or you want to go back an hour right now, you can do that. Or go look at last week's stream. It's on my Twitter feed. You can find it. It's on the YouTube channel, even though it's a little harder to find. The YouTube with the stream videos and what's current, what's next, and the recorded, it's a little, you go to that live section or stream section or whatever, it helps, but it's a little hard to navigate. Maybe I'm just getting old. Anyways, the point is, look at how I scratched and managed very aggressively trades last week versus what I'm doing in this trade. And go back and listen to what I said earlier today and connect all these dots about the topic of scratching before we were ever in the position. And you can really get some very, very solid takeaways from watching last week and watching this week. Most people move to break even, scratch, trail tightly, not out of a pure process driven, I only scalp momentum type of approach. They do it as an emotional crutch to not have to deal with discomfort. So just search yourself on that a little bit. Check your process. What kind of trader do you want to be? Do you only want to scalp direct momentum? Then fine. Trail that stop tightly and you're banging out as soon as there's a stall or whatever, or the order flow little shifts or a little absorption, whatever. Boom. Great. You're a very short-term scalper. If you want to hold some positions, you got to learn how to hold some positions. You have to shift from, okay, I'm just hyper fixated on the order flow and the everything to nail an entry and to maybe nail an initial scale out or maybe scratch it if it's not looking good, all those things. At a certain point, for me, after I've reduced risk and taken some scales and stuff, you have to move to a place of hands off. You got to let go of the steering wheel. When you guys hear me talk about maybe I'll get lucky, that's me doing the thing that I think Pax does. I think Crudele does this. I referred to this earlier on last week or the week before. Traders develop these things they say to themselves to help themselves based on their past experiences. That's what all traders develop, these things. So when you hear me saying, let's see if I get lucky, do I really think that I don't have skill? Do I really think that, whatever? No, it's me putting myself in a healthier frame of mind to say, this is out of my hands. This is out of my control. I don't know what's going to happen next. Let's see if, who knows? Let's flip a coin. Let's see if we get lucky. Okay, so we have traversed the DVA now, which with one measly contract on here puts me in an uncomfortable position because this is a spot where the sellers could take it. So I'm going to watch this carefully at this point. I really do want to be out of this thing. We moved down, but Delta didn't move down with it, so I'm hanging on a little bit. We're moving down a lot more, and Delta's not moving down with it. That's so yeah, I guess we missed the moment now if we were going to take it off right there. But if I had, more contracts on, I would absolutely have scaled out of some here. I think given that we failed at the lower edge, we could, again, easily see those 19.5s and kind of flirt with, and let's see if we get that overnight high, that type of thing. But really, it's not about the overnight high. The overnight high is there, guys, because of the volume distribution. People get so fixated on highs and lows. Guys, there's other things that are driving why the highs and lows are there. It's not the highs and lows. It's value. Sorry to burst your bubble there, but you gotta, I don't know. You have to see things. You could do it with pure support and resistance. Profiles help. I'm not a profile salesman. I have no incentive to tell you that. Profiles help. You don't need my courses to learn how to use profiles. And if you want to learn the root of why profiles are a truth of the market, not just an indicator, they're a truth of the market, study auction market theory. I don't believe there is a NinjaTrader desk. Futures Trader 33. And I just caught a glance of what Michael said. I can't keep up with all the chat, guys. But just to be clear, I'm not saying that in no situation do we ever move stops. Do we ever tightly trail stops? Do we ever come out if the momentum wanes? In no way am I saying that. What I am saying is that there's a time and a place, that context matters, and that we should apply appropriate tactics for the situation. That's what really good traders learn how to do. So we do have some stops all the way up into mid 460s. Let's see if we can go do that here. In fact, I might throw out a limit. It's near the +2 standard deviation. Watch this delta here. Let's see if they just capitulate it and really slam it. There it goes. It's quite a stretch to get this, but the stops are there. Look at that. So at this point, if it fizzles out right here, I'm banging out of this thing. I'm coming out. Don't be a D for a T. Do we have to be politically correct on this stream? I haven't received any instructions. I don't think they have to worry much about me. Some of those others you got to watch, like Leo, that guy. I don't know if Leo's here. All right, so we're out. So look, we caught the traversal of the distribution for all intensive purposes. Was I maybe looking for overnight highs? The DVA framework, the intraday, yeah, there's Leo. The intraday framework of the standard deviation bands matters, right? It takes energy to push well beyond those. And we got to a point where I said, watch that delta, watch that delta. Boom, they really ramped it. Big picture, if you made me, gun to my head, had to bet right now, yeah, we do take out the overnight highs today. However, given the energy spent into the +2 where we were and the way the delta capitulated, the probabilities are heavily favored that we actually see a down rotation, and then who knows what happens from there. So therefore, for that reason, I'm out. So what other points from our prior discussion could we tie in right now? Spectrum of opportunity. We talked about that into the open, how essentially the move had already been done in the overnight session, and we were just kind of diddling in the middle. What became really good about the trade we caught was the fact that we actually ran some stops. We actually created kind of an inventory clear out and whatnot. Now, someone said, take a short. Well, no. Just because we get to the upper end, it just doesn't mean automatically that, I agree with you, right? If we were to draw out some form of this is what Parallels doesn't like. There we go. The mouse sometimes disappears a little bit. It's like, where is it? Yeah, okay. So we could say here's the current price. Here's risk. I don't know. We could run stops because of what the dynamic of what's happened, but let's just put it here. Okay, so the reward is indeed greater than the risk. Okay, I'll give that to you. Doesn't mean we just stick our necks out there. What about this? What about this tape, right? What about the fact that there's really no sellers, it might go down from here. I have no idea, but you don't just blindly put risk on based on where we are with some of these distributions or structures or whatnot. There needs to be more that goes into it than that. Asura says, why do quants say what you're doing is not feasible in terms of beating the market, with discretionary type trading? Number one, not all of them do. The best quants that I know started out as discretionary traders, and that's what made them a strong quant, is because they got their 10,000 hours in of actual screen time, actual pattern recognition, actual, that's interesting. Let's test it. Let's study it. And they end up going, and perhaps they had a background with strength in programming or whatever, and they go down that path. Look, there's a whole quant world out there that I have no clue about. Okay. So take my words here with a grain of salt. I'll just speak from my own experience and the people that I know. There's a lot of quants out there, I think, that struggle more, especially a retail quant who just wants to just dive straight into quant. Let me just back test. And by the way, the reality is that, and I just read like one of the sharpest minds in quantitative finance, machine learning, some books by them and whatnot, because I'm kind of dabbling with some of that myself. There's a book that could be written, which is like why back tests don't work. And I mean that from a very, very sophisticated level. The more sophisticated you get in that world, the more you understand how flawed your back test is for reasons that you could not even imagine. It's a big deal. One thing we haven't done on this stream, I'd kind of was taking a look at. We could turn on my I don't even know when my time is done here. I don't know if we have time for this. Maybe we'll save it for next week. I've coded some actual strategies in Ninja. Let me go to this sim. By the way, one of the best takeaways for today's stream, here it is. Hot pink trade panel when you're in sim mode. Let there be no confusion if you're in sim or you're live. And that's fantastic that the Ninja platform allows for such a thing. Sierra does that as well, which is a platform I've used in the past as well. There we are, running some stops higher. You do not want to be that guy. Not that guy, pal. That make the mistake of, I thought I was in sim and I'm live. I once had to let a desk trader go for that mistake because it was nasty. It wasn't good. There we go. So you see the dots appeared on the chart. And this is not perfect. I'm not the best at doing these things, but it's a good tool, and it lines up if you think about it. Like I'm trying longs where there's the arrows are most important, and here's where we got into that trade. There is an arrow here, a green arrow. Here's where I scaled. Start to get some red dots. Here's where I really wanted to scale. There was actually no dot there. But just the next push-up gave them. And then here's where we flattened, and there's kind of the, I think that's where I flattened, and there's a red arrow. So, this came from my brain, so it does kind of behave similar to my execution. And, sometimes it's just nice to have some simple tools. I guess this is not that simple of a tool. It's, custom code. But to take, look, if you use an indicator in a certain way, there's a way for you to just take that logic if you truly have logic for it. Otherwise, you're just kind of kidding yourself as to how you use that tool. If you've truly got some logic for it, learn easy language, learn basic, scripts in Python or C++, whatever. And just, or have someone do it for you, right? You can always outsource it if you're willing to. It depends on how good the alpha is. If the alpha's I would never be able to really trust somebody to code these things for me. That's why I have to learn it. It's out of a protectionism of I can't share this. So anyways, the point is, I'll get to the point. I am not a programmer. I do not have those skills. I use ChatGPT. It's incredible what you can do these days. Take some basic logic and create a nice visual for yourself so that you just simply don't forget, that you're reminded of some things that you want to keep front of mind as you trade. That's what indicators are for. That's what these tools are for. So anyways, I thought that would be cool to share. It's not a value area. It's a proxy for a value area. It's simply highlighting the upper. Go watch the recording. It's the upper distribution from yesterday's profile. So look at there. We traversed it. Haven't quite got those overnight highs yet. Doesn't really matter. But do I? Oh yeah, that's where I came out right there. Do I feel bad about missing out on a little bit of this additional up move? No, it's not even a thought. No, there was no reason to go short. If we go up here and then fail and the sellers take control of the tape and all these things, then yeah, you could continue to trade a rotational day in this sideways market that's not been able to sustain anything outside of this distribution we've highlighted. So let's pull up the fills. Where are they? I've had this happen before. I don't know what it is. Maybe some ninja expert can help me, but I'm on the right account and we've obviously been trading. I think it has something to do with the strategy being attached to the chart. It doesn't allow, let me remove it. There they go. Okay, so when you have a strategy attached, you can't see other fills. So let's take a look at what we did here. Got a little messy there. What is my hotkey for an arrow line? Control F2. Can't do that one-handed. Yeah, we can. There we go. All right. Oh. Uh-oh. Okay, let's use Zoom. All right, we got long here. Scratched it. Got long here. Scratched it. Went for the stop run. Love that play there. That was nice and clear. Took all the profits kind of in this little cluster here as we stalled. Then we took kind of 3 attempts at getting involved at this, and we caught it on the third one. Did a good job of standing aside, losing little bits, paper cuts. Kind of took more of a full loss on this one here. I think what's the win percent today? Loss, 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 win, win. 2 for 6, 33%. But what's the risk reward on this guy here, right? Compared to all those losses we were taking, right? So the account was up, was it just over 2K today net? And a lot of these little paper cuts were, $400 or $500. So that's how I trade typically, is low win percent. I take paper cuts as I'm trying to work into an idea. And then when I know I'm right, I'm able to sit and do nothing. And I'm able to hold. And that's what makes the difference.
So Merritt, that was fantastic.
Thanks, brother. Just another day in the grind.
The best thing of that whole presentation, I'll call it a presentation.
It kind of was. Not a lot of trading.
But I'm going to quote you. Real winning is in the waiting. That's so true.
On both sides of the coin, whether it's waiting for the opportunity, waiting once you're in, once you've secured an opportunity, absolutely. I can't. Yeah, many people have come before us to teach us that lesson. It's up to us to heed that advice and take enough pain of not listening to it to start to accept it and be able to apply it.
Yeah, no, that's right. That's right. But once you get used to it, then, you can come up with strategies to kind of hang in there,
Yep.
You get one of those little spinny things, and you hold between your fingers and you spin it. What do you call those things?
Widget spinner, I think it is.
Oh my goodness. Well, that
We're
was
going to
awesome,
hang out later
man.
today, right?
I think we're going to hang out now. I know you've been going and going.
Oh, nice.
Yeah. So if you have time, we could keep rolling here.
Absolutely, man.
All right. All right. By the way, you have arguably, maybe not arguably, the best trader's name there is. I mean, I think Dread Pirate Merritt Black when I see your name up on the screen.
Oh man, thank you. I am proud of the name Merritt. I am, if I can say that in a somewhat humble way, because it's a huge part of my family history. There's been a Merritt in my family every generation since 1794. So, and my son has the name as well. So it's cool being a part of such a really, really cool history. And it almost didn't happen. The first Merritt pre-1794 died as like a 2-month-old. That happened a lot back then.
Yeah.
They had another kid, named him Merritt, fell off a horse and died at the age of 16. They had another kid, 1794, named him Merritt. Kind of weird, by the way, that you keep naming these kids the same thing that die. And that was the line that led to me here today and to my son. So I'm very proud of it. I really love the history behind it. It's very, very cool.
Well, that's awesome. Not only that, you're tracking it back. I'm an ancestry nut myself. I've spent
Yeah,
I don't know
nice.
how many hours like
Yep.
wasting time. But the stories you get are great. I have a great, like a 13th or 14th great grandfather. His last name was Roland,
Hmm.
and he was on the Mayflower and he fell out, and he got tangled up in the rope, so they were able to pull him back in. Otherwise, I wouldn't be here. They call him overboard rolling.
That is awesome.
Oh my God. Anyway, no, so great name, man. I for sure. And it's awesome you track your history way back then. Now, is this it seems like an English name, but you went to school in Alabama, right? Are you from the South?
Yeah, obviously when the family first got here, it was all, up in the Northeast where everybody settled, and then Pennsylvania, then I think Ohio for a period of time, and then North Alabama, Lower Tennessee. Yep. But yeah, I was born and bred in Bama.
Wow. Did you take it hard when Saban left?
Man, how could you? It's more of like what a blessing, what a ride to be a part of. I mean, it's like UCLA basketball back in the day or whatever. I mean, we got to experience that. I graduated college in '09, and when we won that first one, I mean, just what a pleasure to have that man run our program and to have the success that we had. And quite frankly, I I took a lot from Nick Saban and his ways to into my trading, into mindsets, into things like that. He's just yeah, awesome.
Isn't that great how you could learn lessons from it doesn't have to be a mentor in trading, right?
No,
It could be a mentor in anything, and you could learn lessons that you could apply in the very difficult job we have of day trading.
Dr. Steenbarger talks to guys a lot about that, and he'll almost force that. We'll be having this trading problem, and he'll say, what are some areas outside of trading in your life where XYZ or whatever, and try to get you to start to connect and make those associations between strengths that you have outside of trading, repetitive weaknesses outside of trading, those kind of things.
Yeah, yeah.
That's one thing I think all traders who make it come to learn is that you're not just who you are in front of the trading screens. You are a complete person that shows up. You might learn new things that you could previously skate through life without knowing about yourself. Um, I referred to myself as a literal monster for years. There were things that came out of me in trading. I'm not a I guess I'm a little bit of a, you could call me a combative person a little bit, and I mean that in a sense of like I'm kind of like Larry David. I just kind of like say, someone says something and most people will like let it go, and I'll be like, what do you mean by that? Like, what is that? So it's a flaw. Okay, it's not a good thing. But I am not like aggressive, angry, those kind of things outside of trading. And boy, you got me in trading, and I had to deal with losing money and being wrong at the same time. I did not take kindly to it. I was so angry at the markets for so long. Um, so yeah, we could talk all day about it, but you certainly, if you're gonna make it, you gotta learn those lessons and start to learn a bit more about yourself.
Yeah, you have to taper your personality sometimes. I mean, I'm a hyperly aggressive person,
Okay.
and I like, competitive and all that stuff. And I realized, hey, we got to turn on the humble switch here
Mm-hmm.
bec- because, I'm gonna keep trying to win, and I'm gonna keep losing. Let's be a little humble here and take our time
Yep.
and think.
That's right, man. It takes one to know one there, brother. I have certainly been called cocky at times in my life, and that's certainly a downside characteristic of me. And I absolutely had to learn how to be a good loser. Period.
Yeah, yeah. Yeah, it's tough. So, all right, we're going to get into some trading stuff too, but I wanted to ask you about the oil painting. What's up with
Which
that?
one? What?
I think I read somewhere where it's
Oh,
one of your
in
hobbies.
general, doing that. Yeah, 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 yeah.
Yeah,
Okay, not
yeah.
yeah, yeah, man. So when I was with S&B Capital up in New York, I Just started taking a class. I studied under Greg Kreutz at the Art Students League of New York, and that's one of the cool things about being in a city like that is just that you could go do something like that, you know. I mean, just ridiculous. So yeah, painting live models and you know, it's always a bit as a non-art person who come into a room and, you know, somebody's just derobing in front of you. It's like, okay, here we go. Uh, but then you start doing the painting thing and, you know, you're studying whatever part of the body it is and you're just staring at it so intently. To me, painting is a bit more of a science than I think a lot, at least realistic painting, right? If you're just you know, doing the thing where you throw paint at the wall or whatever. That's a little less scientific. But if you're trying to actually capture form and the way light is interacting with it, it's a science, and it takes a lot of perception. And it's constantly, because you're doing it with a human error element with the brush in your hand. You're constantly doing things wrong. Something's out of proportion. This thing is not drawn right. This edge is too sharp when it should be more soft to make it kind of disappear or look more rounded versus blunt. It's constant problem solving. And I feel like there's a lot of lessons for trading, and there's frustrations, and you got to work through it and go to a process for fixing things and whatnot. But yeah, man, and that became a big outlet, right? I think traders need outlets. I think, look, through my college years and shortly after, I was obsessed with markets. I would forego other. I like to say I lost girlfriends because of trading. You know, they wanted more of me than I was willing to give at times, and I think that all greats in a field, there has to be sacrifice elsewhere. You can't just like, you can't do trading as a hobby and get to certain levels. You can certainly do trading as a hobby if you want to. That's great, but you got to understand what that's going to be for you. Um, but anyways, I kind of
Yeah.
forget where I'm
So
going with all this. Go ahead.
yeah, no, that's okay. So at a certain, so by the way, I mean, you throw in the triathlons and the music. You're a Renaissance man, but it seems like you started as a financial advisor maybe at Merrill Lynch, right? That was that your first kind of step
That's
into the
right.
financial world?
Was totally in love with markets and had these grandiose plans that would be a portfolio manager job, when in reality that was a pick up the phone and get a new
Yeah.
client job, right? So
Yeah.
I quickly looked to pivot.
Yeah, it was a sales job. I had I
Yeah.
mean I was a retail futures broker for 20 years. And you know, it was as much of it as a sales job as anything. And
Hmm.
when you know, it's funny you were talking about sim trade, you know, your pink panel.
Hmm.
I don't know how many times I've got a call from a customer that said, "Hey, I made $1,000 on a trade yesterday and it's not on my statement." And I was like, "Oh, well, let me check." You know, we get the electronic log files and you could check. It's like, "Oh, you made that in sim mode."
Yeah.
And they would be
Yep.
upset.
Yep.
Now, if it was different, if it was reversed, I wouldn't have got the phone call, right?
Oh.
Hey, Jim, I lost $1,000 yesterday. It's not on my statement. How come?
Yep. Yep. No, that's a great little. We've all made that mistake of being in that wrong mode, at least briefly. Maybe you figure it out within 5 seconds of putting a trade on. A lot of times you don't. A lot of times you're so fixed on market generated information, you're not as focused on what account is showing on that panel or whatnot. So that featured a hot pink. You're not going to miss that. You know, something.
Yeah, yeah, yeah. So then you transition. So let's talk about Apteros. You got to Apteros somehow. Am I saying it right? Apteros?
That's right.
Okay. And so you got there at some point, somehow through some. How did you get to that point?
Well, I got the job to be a trader for S&B Capital in New York. So I was with Shark, Swang, Mike Belfiore, Steve Spencer, Memo, all these people just at a real physical New York prop desk. You know, what an honor, what an experience. And it was also a place where They valued education, training. They even, as a secondary income stream to the trading, also offered those things publicly. So I was kind of shaped in that world and learned about that. And I started out as a stock trader. I didn't do so great as a stock trader. A lot of the tools that I'd kind of honed in the futures world, like cumulative delta, for example, if you're trading a stock with a huge spread and there's all these white prints in the middle and whatnot,
Yeah.
where is that in terms of cumulative delta? Is that at the bid or the ask or nowhere?
Yep.
So some of the tools, especially order flow, get a little wonky when it comes to spready stocks. The culture there was trading stocks in play, big movers, big gappers, things like that. What I'd been working with profiles was like today, where are we relative to this nice upper distribution from yesterday? We can kind of play the edge of it. When you're gapping 3%, you do not have those references. They're all gone. So I was really trying to kind of, quite frankly, I was a little bit stubborn, trying to force some of the frameworks and tools that I had started to develop in that world. And I would think I was break even in like 6 or 7 months of stock trading. So I did not do a good job. Bella came to me one day, and after a meeting, I'd been working with some of the other traders. We were just talking as we do. And he said, probably be the best compliment I ever got. He said, Merritt, I've written books. I'm a good teacher. I think you're a better teacher than I am. And he said, would you consider, doing some of that with us at S&B? Sure. I'm flailing here as an equities trader. I can start to do some things like that. And that led me back to the future space. I said, guys, we could have a futures desk. We could build this out, blah, blah, blah. So I got the nod to build out both the training program as well as the head up the futures desk for S&B. Did that for a number of years. And that's what led me to then open my own shop, which is Apteros. And it's been 5 years now since we started that in 2020.
Wow. Well, you just, yeah, for sure. All right. So that's a fantastic story of where you came to where you're at right now. So let's talk about your layout, your charts. Like, what is, how did, where did you get to this point where, you have this layout that we're looking at right now?
Yeah. So I started out as a price action trader, right? No, well, I guess you could say I started out as searching for the Holy Grail indicator. That's I think where most of us start out. And then I said, all right, naked price action. And I really studied a lot from a guy named Lance Beggs out of Australia. Did you ever come across him or his work?
No.
Really, really great guy, ex Australian military helicopter pilot, very process driven, very disciplined man. So anyways, I learned a lot from him about price action trading and did that for a while. And then just through trading forums and communities and all these kind of things, started to see people using profiling tools and whatnot. I was like, I got to kind of check that out. And then from there, started studying actual order flow. And therefore that's why I have the cumulative delta here, which is, people think cumulative delta is something super fancy. It's literally a chart representation of the time and sales window. That's what it is, right? So it's the ticker tape in visual form rather than trying to be like PAX and remember every number that streams by you. I'll trade NASDAQ all day, and then I'll go to an after-hour event or something, and someone will be like, "Oh yeah, you trade NASDAQ. Well, what's it trading at?" I don't know. I don't even know the numbers. So anyways, so a layout like this is nice and simple. It might look complex to some, but I've got essentially 2 higher time frame contextual charts here. This is VWAP and 1 standard deviation and 2 standard deviations from the weekly VWAP, right? So I get a good sense of where are we trading right now relative to where we were last week, right? And where was that kind of value that built for last week? Where are we trading as this week's value develops in real time. So that's 2 points of context for me. Last week's value area and the developing current week's value. Remember, we on the stream earlier, I'm not sure if you were around, we were talking about getting into that, maybe getting to the weekly VWAP, and that's kind of added some confluence for the long trade that I took on stream. And then the bottom right panel here, it's just daily profiles, pit session only. Where are we trading today relative to that? And I thought the most pressing thing about today's market coming into the open was this distribution, right? Pharm had talked about it. It's important. Where are we hanging out and staying relative to that? If we start to accept back into this lower area, we could go for shorts. You saw me, other than a stop run scalp short, I took all longs today. It's because we are holding that distribution. And so I drew that distribution as we get to the left-hand chart here, and I'm aware of what's going on, buying and selling and on the tape. And I have that same VWAP-based framework on my intraday chart, just like we have for the weekly. I have an intraday developing value, and I tend to lean on that pretty heavily for trade location.
So on the profile, so you're doing regular trading hours, right? You're doing for the actual. Who cares what happens in Europe and all that stuff?
It depends on the market. Markets like currencies, where the volume's a bit more split between what's going on. For the euro, I think what matters in Europe matters. So you do a 24-hour full Globex profile for those. For U.S. indices, I find that the pit session is. I know there's a lot of trade that occurs overnight these days, but pit session still rules.
Yeah, no, I hear you, and I kind of look at both, but the order flow part comes from there's an order flow suite of tools on NinjaTrader. That's why it has that order flow. You were mentioning it earlier, and so when I'm looking at your VWAP, and I was not a VWAP person until I met Crudele and then Brian Shannon. But you used tell us about the Bollinger Bands. I'm not the Bollinger Bands, the standard deviation bands. You use 2 or 3?
There's 2 above and 2 below.
Okay.
The plus and minus 1, and the plus and minus 2. So that would be, the plus 1 here, the minus 1 here, plus 2 here, minus 2 there. And so it's really, and the red line is the actual volume weighted average price, VWAP. And so it's really just a measure of how far is price able to get at any point in time away from VWAP. And so there's no secret sauce to it, but one thing I talked about on the stream earlier as well is the concept of energy. It takes energy to move a market directionally. So the further and further you get away from VWAP, the more that energy is potentially spent, exhausted, those type things. And so for me, it's 2 things. It's a way to gauge how much energy might be required for continuation. So that's kind of more of a mean reversion type of thinking. But markets can trend as well. And when they trend as a general loose framework, which is what this is for me, they tend to kind of not spend too much time holding back inside the zone between that plus and minus 1. They tend to hold outside of it. And so if they're doing that, and all this other contextual work we'll do with the other charts tells me that I like that direction, then I'm going to go with that trend. If context like today tells me, hey, I know we're poking below some of these bands, but we want to be fading that move back towards VWAP, that's what I'm going to do, right? So it's having a higher time frame awareness and then using the shorter term tools all the way down to the order flow to help fine tune that and to pick good spots and manage risk.
So on that last trade, you went long, the market was going your way, and I've seen a lot of traders say like, all right, if it gets to VWAP might act as resistance, so I want to get out there. But
That's
you
right.
didn't do that. You recognized we were going to keep rolling. What made that difference?
Context is more important than the intraday VWAP framework in terms of what's this market up to? Where might we go, right? The fact that VWAP matters is true. You will see other sessions where there's a lot of rejections directly from VWAP and whatnot. Guess what? This was not one of those sessions. We were above and below VWAP many times leading into this. So that weakens the importance of it. If you see VWAP respected a few times, that's a heads up, right? That it's important, that it matters, that one side of the tape is kind of controlling. Maybe there's some algos out there who are running a VWAP entry program for that session, those kind of things. We can listen to those details. But VWAP, my edge comes from the edges, right? We keep saying that phrase that I say. I see this VWAP framework just the same way that I see a profile. To me, here's the upper and lower edges of it. This middle area from the +1 to the -1 is the distribution. So you don't hear me talking a lot about what the VWAP is, which is point of control. I don't focus very much on point of control. I look at the edges of the distributions, no matter if it's VWAP-based edges, actual literal market or volume profile-based edges. Those are what I'm most interested in.
So it's like the value area.
It is,
the bands
absolutely.
Yeah.
Absolutely. In the middle of the value area is the least good place. I don't even know how to phrase it right now. It's the least attractive place to do business, in my opinion. There's more chop versus from the edges, you get these cleaner wicks I can get involved in and have tighter stops and have a better chance of them working if they're going to work.
Yeah.
Less
So
noise.
I know you touched on this, but I want to kind of just ask the question anyway. So when the chat's like, hey, why don't you go short now? You're at the top of you're at the second upper standard deviation band on your VWAP, but you knew not to. And look what happened. We had a breakout, right? This thing kept going. It just broke out to the upside. That would have been a bad idea, right?
That's right. And I won't say that I had a crystal ball that that's what was going to happen, but I do know that if we were to go to even the bigger picture, such as this weekly, if for the week, we're not going to be able to kind of hold an imbalance down, and we're going to start rejecting VWAP from above and things like that. On this time frame, where are we trying to get to? Well, it's actually, let's call it 1900. Excuse me, 19,800. That's where we're trying to get to test that inflection. If you go listen to my pre-market talk this morning before we even started trading, I was saying that I am bullish for an overall mean reversion play short term within a very bearish overall big picture landscape. So this weekly here tells me that exactly we are below last week's value. So that's a bearish inflection when we get up there. But in the meantime, if we're going to start holding distributions from the prior day, breaking out of prior day distributions and holding those, I think we're in mean reversion mode to get to some of those higher targets. So that's why other than that one stop run scalp short, I was long only today, is because I'm leaning off the lower edge of that distribution within my bigger contextual view of a mean reversion move up to things like last week's value and whatnot.
Okay, and then if that happens, right, then all of a sudden, potentially another short comes on your radar screen, given where the distribution is now.
Now we start the whole process over again. Okay, we're at a bearish inflection. Can we start to hold below an LVN from yesterday once we get there, right? That yesterday, right? Not today's yesterday. We get up there. Oh, look, we failed out of the upper end of yesterday's value. Now we're back in it and holding. That's resistance. Order flows bearish. Intraday VWAP is offering a trade location of fading an upper extreme or going with an imbalance downwards. We put all of it together, and that's the process, man.
Yeah,
This is NADRO, what we're describing here. Narrative is the N. A is for acceptance. Where are we relative to those narrative references and what's going on? D is for that DVA, developing value area intraday, we use to help us identify intraday trade locations. R is the rhythm, the ebb and flow, the zig and the zag movement of intraday rotations. And O is the order flow. We try to put all those things together for a really good trade.
I love that. I love that. So the focus obviously is on regular trading hours, right? Not before the bell rings.
No, I really am. Other than obviously some of the profiling, I prefer to keep pit session only. I'm very much aware of always, what happened in the overnight session. Where did we go? Like I was alluding to on the stream, guys, the overnight high is not important because it's the overnight high. The overnight high or the overnight low, both of which in today's session was important because it was a point at which the market failed to sustain anything outside of yesterday's upper distribution. That's why they're important. And so I'm very much aware of where the market has tested, where it's failed from the overnight session as I begin my prep work and getting ready to trade.
Makes
I don't
sense.
wait
No,
for the pit open to trade if there's a trade. If it's an hour and a half before, I'm very routinely trading an hour and a half before the pit session opens.
okay, so the big news releases happen,
Yeah.
an hour ahead of time, right? So my guess is, I mean, I'm glued to those, right? I want to see what the price action is going to be based on the market
hmm
reaction, whatever the result is, right? I'm not smart
hmm
enough to know if it's a good result or bad result, but the
Most
market
people
is.
aren't. Yep.
Yeah, and that's all you need, right?
Yep. For me, their news releases are I see them as minor annoyances that I have to keep up with them. I have to, again, not knowing what they are, just that they exist, and that I have to sometimes come out of positions when I don't think it's appropriate to hold risk into them. Sometimes I'm stalking a trade. I can't get into it because the news is coming, and then boom, it leaves the perfect opportunity. So I have a very love hate more on the hate side relationship with the news releases.
Yeah, I gotcha. Okay. Well, that's awesome, man. Yeah, thanks for spending so much time with us. You covered a lot of, it was a long morning for you, man.
Another day in the life. Always happy to talk with you, Jim.
Yeah, no, for sure. And you're pretty busy on X, right? You have an X handle.
Yeah, just my name, Merritt Black. Yep.
That's easy. The best name in futures trading business. So, well, let me ask you one last question before we go, because we're gonna
Okay.
move into the next segment in a second, though. Is any of this options gamma stuff for you or no?
I would say that I'm ignorant on it. I've
Okay.
uh I've never studied it. I've never tried to fully understand it. I kind of know enough about the market can be pinned to an area. I understand that right now options are kind of a thing, the tail that wags the dog a bit. So, I don't question its validity. I've never seen anything from it that would cause me to jump ship and totally just
Yeah,
start to build process around it.
I gotcha. I'm on my learning curve, so I
You'll
just
have to
thought I'd
teach
ask.
me. You're the one doing the deep
Uh,
dive into it and really seeing how well some of that stuff works. So you'll have to enlighten me one of these days.
Well, yeah, when I'm ready, man, it's gonna take some time.
Let
Jay
me know.
says, Nardo, let's go. Jay in the chat.
We
That's
actually
awesome.
get that a lot.
Oh, fantastic. Anyway, I won't keep any longer. Thank you for being with me. Appreciate that. And we're gonna go ahead and transition. I have Shy Girl with me for our hot commodities section, so stay tuned. Nope, you just popped up on my screen just like
Hey,
that.
so fast. They were so fast today. How are you doing?
Wow. Pretty good. Pretty good. Can't complain on yourself.
All right, hanging in there. Let's get into some hot commodities. First,
Yeah.
let's start with soybeans. Another one we haven't done, but it is a mover today. We had USDA report out this morning on plantings, and they're 4% behind. We also had some news come out that Trump is considering giving financial aid to farmers who may be hit by this tariffs, and that's about it. But soybeans seem to be reacting the most to this news. So, what are you seeing on the charts here?
Yeah, but I did read that USDA report about on planting intents. I think they call it intent or planting intent, and it seemed like there's more of a shift toward corn and less toward soybeans and wheat. And I didn't get into the details of it, but the chart is showing it's just exploding off the screen right now as we speak. Let me get my daily chart up really fast. I mean, this is a huge, close enough for me to say bullish engulfing. Maybe not perfect, but we have moving averages that are about to cross, particularly the 8 in the 21 EMA. And this is a very large candle right now. It's even bigger than this one that we saw when we bottomed on March 27th. So whatever the president said and that report said, it's definitely bullish. If you just pull in a daily chart, I mean, we're just crushing, the 1-day max. Call resistance was with 1030. There's no wick at the top of the contemporary candle. This thing is like taken off. This is I'm not hitting the sell button, Tracy.
Right. Huge moves today. Sometimes I feel like grain, sometimes they never move, and then when they do move, there's like these explosive moves. Let's move over. Obviously, we've got to check in with the crude market because we got a lot of crude traders in the chat. So we want to check in on that with them. Seems like today, after that huge move yesterday, kind of chilling out a little bit. Still, about break even. We've been, a little below, a little above, but to me, the chart still looks pretty bullish, and I feel like we're just taking a pause today.
The daily chart, that's exactly what the candle looks like. It's a very small body candle. We have a decent wick on the bottom, a bigger wick on the top. We're sitting right on that. I think it's 200 simple moving average is that gold line where we're sitting at right now. So that's a great way to describe today's price action, kind of a pause. But we are in a $70 handle, and we haven't been in a $70 handle since, on my continuous charts, I mean, other than this wick, I mean, it's been, beginning of March. So it's been a long period of time. We'll see if we could find price happiness right today. But on an intraday chart, this is almost a perfect volume profile. And I'm tracking the volume profile from, unlike Merritt, I track it from the start. He did say he does commodities different, but I track it from the start of the session, which was last night at 6. And we have almost a perfect bell-shaped curve here. I mean, it's not perfect, but it's pretty darn good for volume pro. And we have a really, pretty nice point of control right there at 71.66. So it seems to me we're kind of like you just described. We have price happiness right now, and I don't know if is there any other news we expect in crude oil today other than a surprise tariff announcement?
So, right, let's find out. I mean, we have tariffs tomorrow, and we have EIA crude inventory, so it should be a pretty active day. We do have API coming out tonight at 4 p.m., right as the market is closed. You know how I feel about API, but it could be a mover depending if they show overly big stock draw or stock build. So that's coming up at 4.
Tracy, on that API, when I was a lot younger than I am now, I would get calls from customers because the data wasn't really published widely back then. It was behind a paywall and you had to know someone kind of thing. But it was really popular. I'm going to say that, I don't know, middle of the 2000s, maybe. I'd get calls after hours saying, hey, what are the numbers? What are the numbers? And that report seemed to have lost its steam for some reason.
Yeah, I mean, it really has. And for people that don't know, the difference between API and EIA is API is a voluntary query to a trade association, whereas EIA is mandatory reporting to a government agency. And so it seems, over, I would say, I don't know, over the last 5, 6, actually even before 2020, we started seeing huge disparity between those two numbers, and so I nicknamed it crappy because it was always so different from EIA. So that's the difference between the two. Market still moves on it. for whatever reason, and people still look forward to the numbers. So that's that, really.
Yeah, and by the
Now
way,
let's
though,
move on.
that on that EIA.gov website, that's a fantastic website. I mean, I've wasted hours of my life in that website with all the stats that they have. It's just really interesting.
Oh, everybody, I mean, I have always said it's highly underused. There's so much information there. Nat gas to products to refining to, I mean, just everything. So check it out if you're interested in the crude market and want to see what's going on. I mean, you can literally look up imports and exports to every country in the world that the U.S. Deals with.
Yeah.
So check it out. And we got to go, obviously, to gold. Gold seems to me, I mean, obviously, this is one, that is kind of a risk adverse trade. Today seems like we hit a whole new high again. But it seems like another one, kind of like crude, that's or this candle looks a little bit like we're chilling out for a day, at least.
Yeah, it's almost like, it's almost like the day before a Fed day. It's like, all right, tomorrow's, whatever. I can't, anticipation day. What is it? It's
Liberation Day, Jim. Liberation Day.
It's almost like that. It
Dumbest
almost seems
name
like
ever.
it sounds like, I know. Well, no comment. But in any event, yeah. So we're kind of paused, right? We're anticipating tomorrow. The thing I like about this candle, even though there's no body to it, really, which makes it really a real doji, is there's a much higher low, right? So we have. If you really want to think about it, we have 1, 2, 3, 4, 5, 6, 7 higher lows in a row, and then 4 higher highs. That's not a trend in my mind that's going to like reverse for no reason. We might get a reason tomorrow, but it's pretty bullish right now. And again, on the intraday, the volume profile is a little wonky with this volume node up around 3172. This was pretty much even before midnight, all that price action happened. But we stalled at R1, which is the pivot number. And that 0 DTE call resistance and gamma wall is also up there as well. So we bumped up against that, sold back down, and now we're kind of hanging out. We're not close to Jack's 1 at all. But if I had to draw a rectangle, I actually have a rectangle here. This is my area of support because we touched it once, we wicked through it twice, we wicked through it 3 times. So maybe we'll break through it. I don't know, but so far it's holding.
Yeah, I mean, I'll be interested to see how this candle closes today, because, if it ends up kind of being a doji, we could see a little bit of a pullback, but we'll have to wait and see. And again, of course, for Liberation Day tomorrow to see how markets react to whatever announcements may come regarding that. And
Yeah,
then
and by
let's
the way,
move
now
to
that wait one sec, Jesse. Now that you mentioned
on.
that, so today's candle does have the potential to be an infamous turnaround doji, right? It very well could be. So I circled it in red, and we'll check it out tomorrow to see what happens.
Perfect. Love it. And then let's move to gasoline. We haven't talked about this one in a while because this seems quite a bit stronger, particularly today, than the crude oil is. So we are heading into summer driving season. Summer gas is more expensive, just in general. But this market looks like, it could have further to go to the upside if we we close above your resistance triangle there, or rectangle, sorry.
Yeah, I mean, I have a loosely fitting trend channel here with the blue dotted lines. We have that area resistance that we're smashing. We don't have a doji candle today. We have a pretty decent sized green candle today. All the moving averages are just arcing up. And it really coincided with this kind of doesn't always work, Tracy, but when you see these fast EMAs crossing the slow EMAs, it gives you a signal. And now we have a lot of distance between price and that 8 EMA. So yeah, this is looking pretty positive on a daily chart. On an intraday chart, the volume profile is skewed way to the top right now, which is also bullish with a nice point of control, 2 spot 3040. R1 is a little further away, but I don't have an electric car. I have to put gas in my car.
I have a SUV, so, but, I think markets also will be looking at, those gasoline, if we have gasoline draws tomorrow. I think that'll be another catalyst to push this market higher fundamentally if it ends up being a rather large one.
Okay, and so
And
who
then
folks are kind of Tracy, for folks that are kind of new to this, the idea of a draw. When you say a draw, you're meaning the reserves that the EIA tracks. There's less of them instead of more of them.
Correct. Where you see a gasoline build would mean that we were building inventory. And then a draw would mean that we're obviously draining from those reserves, which is more bullish for the market, obviously.
Yeah, yeah.
And then let's take a peek at Bitcoin again. Because we talked about it yesterday. That chart's been very interesting, and that Bitcoin's on the move today. It looks like it broke, it tried to break down, and it's putting in a pretty good move to the upside today.
Yeah, I mean, on the daily chart, we're still out of that subtle kind of trend channel up because we had that big couple of days down, but we're back into that 8 EMA and we're approaching the 21 EMA. I'm super fans of those two EMAs on a daily chart. And there's no wick at the top of this candle. It's a pretty solid move up on Bitcoin. We're still pretty far away. This is an old area of resistance at around 95,000. Got a long way to go to get there. But this market, I mean, it could go 5, 6, 7, 8% in a day, and it's like regular day. So you never know.
Right? It's a mover. I would be most interested to see how this market reacts to tariffs if it ends up being sort of I hesitate to say this, but more of a safe haven trade, where if tariffs end up being much bigger and outsized than expected, people would flock to Bitcoin. But we'll see how it reacts.
Yeah, no, I know. I mean, sometimes it does seem like that, and sometimes it doesn't. It's kind of an odd thing. When when it's risk off, like totally risk off, this tends to go down. And I know that
I lost you.
did you lose me?
Yep, you're back.
Okay. Sorry about that. But in any event, yeah, we'll see what happens. It's getting a bid right now. We're way over R2 right now. We're way over Mentor Q's 1-day max. And we're also way over the We're over the the high vol level as well. And there's no wick again. This is a 30-minute candle. Buyers are coming in, pushing this thing up pretty nicely. And the RSI still has room to grow to get to 70.
Well, excellent. So tomorrow should be a pretty wild day on hot commodities. I'll be interested to see what the movers and losers happen to be on this announcement, if we hear it in the morning, that is.
Oh, for sure. Well, yeah, that's another thing is when is it going to happen?
Well,
Um,
exactly.
I might have just broke my chart by trying to put a Japanese yen chart up. I wanted to ask you about that because I think were you talking about it this morning, the yen?
Oh yeah, on the chat. We were talking about a
Oh,
little
that's
bit
what.
that it's a safe haven trade. Delhi was talking about it this morning, and then I was talking about it in the chat a little bit.
Okay, yeah, and then so let's talk about that really quick, if you don't mind. I mean,
Yeah.
this is truly a kind of if we're thinking global recession, this could benefit from an influx, right?
Oh, absolutely. Absolutely. It tends to be a safe haven trade, and anytime we see any kind of financial crisis like 2020, 2008, or it also tends to strengthen during big geopolitical events, like we saw back in 2022 with the Russian invasion of Ukraine. So definitely keep an eye on the yen for sure.
Okay, and you mentioned, I think that they have a surplus, not a deficit, right, with their trade?
Correct. That's kind of why it's a safe haven, more of a safe haven trade, because of their surplus in trade.
Yeah, and it's almost like they're like the opposite of us, right? They have really super low rates,
Right.
and everything is kind of upside down. I'm wondering though how bad this the automobile tariff is going to be on them.
It will be interesting. I know that there have been ongoing discussions with Japan and India. So, India for LNG, Japan for automobiles. So maybe they get some sort of tariff break. I don't know. If negotiations, we're kind of in the dark here. We get some of these headlines, but
Yeah.
we don't know anything for certain yet.
Well, I have to let you know I have both a Toyota and a Honda. So, but I already bought them, so I don't have to buy
Well,
another one.
oh well, that's good. So there you go. I was like, so never don't buy a new car.
I know exactly. The other currency pair I just wanted to talk about really quickly here. And this one, this is the Swiss franc. It's the Swissy versus the U.S. dollar. Um, and this is another kind of tell for me when I see like, this is a daily candle right here. So starting on March 3rd, we had a pretty decent rally. So a weird gap there, but peaked out right here. This is when we saw some of that risk off as well. And I think, in my experience, and I'm interested in yours, is this a place to look for when markets are breaking bad and you're not sure if we're risk off or we're just reacting to news?
Yeah, it's another. I mean, it's not as widely traded as the yen, but it's definitely one to look at for stability and kind of a safe haven.
Yeah, no, I agree. I do look at it every once in a while. It's tough to trade because a lot of times you get these like little sideways bars, right? It doesn't move that much, but when it trends,
Yeah,
it does trend. Yeah, for sure. And if we got time still, could I ask you about Dr. Copper?
sure. Want to take a look at that one?
Yeah, let me pull that guy up. There we go. So
So
another baby
copper.
yeah. Yeah.
I feel like it's another one with kind of an indecision day so far. Um, and another kind of hurry up and wait, or maybe just taking a breather. It had a pretty large move yesterday overall. If you look at the daily candle, it was a rather large move. So perhaps we're just taking a breather. Obviously, once again, looking to see what tariffs are. And I'm sure this market is kind of apprehensive about whether copper tariffs are going to be announced with the rest of the tariffs tomorrow, or if not. I mean, they said first it was months, then it was weeks. And so within this market, traders aren't really sure, do these tariffs come with the rest of it, or do we still have a few more weeks?
Yeah. That's the other thing. It's, the Wall Street Journal had a really good article this morning about it's kind of a dual idea, right? Are tariffs, is there going to be broad-based tariffs across the board and to generate revenue and to create fair trade? Or is it going to be a dynamic situation going forward forever, or maybe not forever, for 4 years, to negotiate other things that the administration might want to get out of that government? It almost seems like if the latter is the case, then the revenue generating idea is kind of out the window because we can give it back.
Well, absolutely. I mean, if it comes down to, we're putting XYZ tariff on XYZ product, but if you negotiate with us, we'll either lower those tariffs or perhaps just dismiss them. So we don't really know kind of yet exactly what's coming. Again, I'm really waiting to see tomorrow to see kind of what the language is, and is this administration sounding like they're willing to negotiate some of these tariffs down if they get reciprocal tariffs from the other country down. So we're going to have to watch the language as well as the actual numbers.
Yeah, and it almost seems like China's not even a target anymore. I mean, they are, but Europe's in play now. Canada is in play big time. Mexico.
Yeah, I mean, China, we already have huge tariffs on China. I mean, tariffs on steel and aluminum from China are already at 70%. I mean, it's not much more you can do with that. I mean, I guess you could go to 100%, but he has already enacted tariffs already on China on top of the tariffs that were enacted in 2018, on top of the tariffs the Biden administration added to China tariffs. So I feel like that's been an ongoing story for the last decade, so or just under a decade. So I don't know how much more they want to turn the screws on China at this point, since that's kind of been an ongoing thing.
Yeah. Well, with all this stuff going on, I almost feel bad for the FOMC, for Chair Powell and company.
Well, yeah, we're going to have to see. I mean, it was interesting that JOLTS kind of showed kind of a slowing of the labor market. So definitely the Fed is going to keep an eye on that. And then we have non-farm on Friday. So that will be very interesting after JOLTS showed such a decline in job listings.
Yeah, and that's probably the first thing, right? So step one is we're not gonna list new jobs. Step two is we're gonna lay off workers.
Right. Exactly. And so, and I think with some of this tariff uncertainty, I'm sure that a lot of businesses are slowing their hiring because they don't know how this is going to affect their business and thus their bottom line, and can they afford to hire more people at this point? So not surprising that we showed job listings down, but it'll be interesting over the next few non-farm payrolls to see if this is, how this is spilling out.
Yeah, I mean, and from a boots on the ground point of view, one of the largest employers in South Carolina, where I live, is the Port of Carolina, and Charleston area has one of the deep. It has the deepest water port on the East Coast, and so a lot of my neighbors and friends and stuff have affiliations there. They work there or they have contracts there and stuff. And this is the first time in 3 years where I've heard almost across the board, they're definitely worried. They're definitely worried about this and what it's going to mean to their jobs and their contracts.
Oh, absolutely. I can only imagine.
Yeah.
It'll be interesting. But and plus, we have that fine on any shipper that's using China ships or any China-owned ships coming into port are fined anywhere from 1.5 million to 3 million. So kind of uneasy a little bit in the shipping sector.
I mean, can't they just put a Swiss flag on top and no one knows?
Well, I mean, a lot of ships are owned by a different country than the flag they're flying. But you can't
Okay.
hide the maker.
Okay. So they have there's a VIN number. Like we got a VIN number on this boat and we know exactly where this came from.
Exactly.
Oh, that's pretty funny. Well, we'll see how it goes. We're living in interesting times, where we have an administration that's, a fire ready aim and, hopefully the
Not
plan,
dull.
I know, hopefully the plan will come through and we have all these great commodity markets to trade. Before we go, one thing that I noticed this morning, and I don't know if I've ever noticed this before, but I was comparing the gold contract, the classic, the big size gold. And it hit right now it has 149,000 contracts traded. The micro contract has 139,000 contracts in it. It has the same volume on it. And
I keep telling you guys, if you are not trading commodities and you're not used to trading commodities, try the micros. They're just as liquid as the big contracts.
yeah, 100%. I am with you 100%. I'm a super fan. When they first came out, I'd call the CME. I was like, "What are you guys doing? Is this a money grab?" But it turned out to be the best thing of all time.
Absolutely.
So, all right. Well, we had a good morning.
Right.
Tracy, thanks for being with me. We have great order flow labs guys coming to trade the close this afternoon. Looking forward to that.
Nice. I will definitely be in the chat and tuning in.
Very awesome. All right, everybody. Thanks for tuning in. We'll be back at 2:30 and, rest up, have a good lunch and be ready to go. See you then.